Okay, so we have recordings going. The other thing I'm about to do, and you guys probably are not going to like this, but you're going to have to get over this, and there's a reason before it. So the first thing I'm going to do is kill the chat. Ready? All right, so now the chat's privatized. Now, on the translation side, you guys don't need to worry about that because I'm not seeing it, so you don't have to privatize your chat. But what I would like you to do is just take notes of the questions if they're coming in before I ask for questions, because what happens is as I'm starting to go over things, people want to ask questions right in the middle of when I'm speaking, right? And it's just human nature. Like, oh yeah, no, I want to know what that is. I want to know, I want to know. And they want to ask it right now. So they'll post it and post it and post it. And then other traders are reading their questions instead of listening to what I'm saying. Then they'll ask the same question 10 minutes later, but I already answered it. And it just disrupts the flow of trying to teach, right? I've been doing this long enough. That's how it works. In a visual classroom, I could say, everybody put your hands down, hold your questions. In a virtual classroom, I can't do that, right? People just post like crazy and then they think they're being ignored. So then they repost. Did you see my question? Did you see my question? Right. So here's the deal. You can post all you want. Nobody else can see it at the moment. And I'm not going to stop what I'm doing to read it until I say, are there any questions about this? And if you've already posted it 20 minutes ago, I'm not going to see it. So it's not going to do you any good to post away now, right? If you need to make a note for yourself, then have a little, have an open little WordPad or something or notes on your PC and you type your own questions out. And then as I'm going, you can check them off. He answered that, he answered that, he answered that. And then if there's one left, when I say any questions, you'll say, hey, yeah, I do still have one. Okay? That's going to keep it going. The other thing it does, and Juan and Rodrigo, you guys, I'm sorry. If it gets a little fast, that's okay. Um, do the best you can do. And if I need to repeat something when I say any questions, you can ask me to go back over. I know you don't have as much practice with me as Andrea does, but you guys are excellent translators, so you may not miss a beat. When I get going, right, it's called stream of consciousness. So sometimes people say, oh, you're going too fast. I didn't hear that or I didn't understand that. When I'm writing like a thought process and I'm trying to get all this information out and it's just coming through and just flowing, like none of this is ever scripted, right? I can't stop in the middle of it to take a question and then I forget what I was about to say or I lose that train of thought. Oliver does the same thing. He'll get going and he'll tell you guys, he'll just ignore posts till he's done. When we're trying to get a point across and we're reliving a trade or we're reliving a lesson where we know we got to get this out because it's an important point that people miss, I'm not stopping to look at the chat room. This is not a live market. I'm not missing any trades, right? So I am just going to go, and when it's flowing, it's flowing. And when I decide to stop and take a break and ask questions, that's when I'll answer you, right? So I'm not ignoring you. It's not a personal thing. Don't keep posting why you're not answering my question. The truth is I'm not looking at it while I'm teaching, okay? So if the chat's off, then no one gets their feelings hurt. No one thinks they're being ignored. Most importantly, nobody's being distracted by other people. There's 250 people in this room. I don't know how many are in the other rooms right now. I can't see it. I don't know, Juan, how many you have over there? You probably have 50, 100, I'm guessing. I don't know. But 24 so far. All right, we might have most of them in this room. Guys, remember, if you want the translation room, you've got to go into the translation room. So we're over 300 people, right? If I have this as open posting, it's just, there's no way, right? I can't keep up with that. So 2050, right? So we're over 300. The other, this is what I do, and to give you guys an idea, Violet, you're saying you're at 80. Is there 2 rooms open for translation? I want to make sure you guys are in the, see? Let's make sure that everybody knows what room you're in, or if you're, I'm not sure, guys. All I got from my admin was it said the translation room was where the translation was happening. But okay, so let's hold up here. What room? So Juan, what room are you in versus what room are they in? Can you get, yeah, make sure everybody's in the same room. That's an issue here. Yeah, because there's 80 in that room, right? So there's the 100 I was expecting for translation, right? So that puts us at 3. So now we're up to almost 400. Um, well, the email I have from admin says to go to, for translation room will be translation. Then Portuguese has their own room. So is there another room you could jump into on called translation room? Yeah, I see it. Translation room Spanish. Try that one and then tell the people in the support room to check their links and then go to that other room, and then you're going to probably have to start the recording over in that room. So anyway, I'll let you get that situated because I haven't taught anything yet. I'm just setting ground rules. And by the way, just so you're aware, um, when I privatize chat like this, and it's the sole reason that I do this with the coaching group that I work with, right? So when we have our lessons on Wednesdays in the coaching room, I do this exact thing. So it is definitely not a personal thing for all of you if it's the first time doing an event like this with me. It's I've learned over the years how to keep it going, how to keep control, and how to make sure I'm getting the information across and everybody's focus is where it needs to be, right? So I shut the chat off in coaching too. Now I see all the posts obviously and I answer them all and I repeat the question so nobody's out of the loop. But it is heightened focus tremendously. The gains of what I'm seeing, the response from the traders is I wish you could do this in the regular chat room. Now in an open chat room with 500 people in it trying to call out trades, I can't shut the chat off, right? But I can handle it over there better during a trading environment because I'm not trying to necessarily teach every minute of the time we're together. We're looking at trades, we're calling out trades, we're walking through trades, and then I can do lessons in between. But overwhelming majority of people prefer when I shut the chat off because they say the same thing. It helps them focus. Okay? So that's why I do it. All right, so you can post away. You're not being ignored. I will get there when I get there. Paul, if you could do me a favor, since people will be popping in and out late, could you just post a message for them, an announcement tab about why that there is no chat enabled and that's the correct setting for today. So please, don't post about I don't know. So you're good at that. Just figure out something to let people coming in know so they're not bothering admin or support or thinking that the room's not working. Okay. How long are we going to be here for? I have no idea, man. This is a free event. So you can be here as long as you want. I'm not sure how long I'll be here today. We'll see. It will be no less than a few hours. I didn't show up here for 40 minutes, I can tell you that. But if you got to go, you got to go. I get it. It's being recorded, so no worries. All right, so before I put up any pictures, there's no pictures up yet. Right? We're just talking. It doesn't matter if you're new, doesn't matter if you've been around a while. The one thing that I have to get across is this. There is no such thing as always with the market, except the market is always right. Okay? So let's start off with some little trader psychology stuff before we even get going. Your mindset when you come into day trading cannot be, I'm about to learn some magical system that spits out profits on every trade every day of the week. All right? You have to understand what the market is. And the best way I can summarize this for you is the market is a random, chaotic series of events that sometimes produces repeatable patterns. All right? That's the best way I can sum it up. It's not always chaotic and random, but it doesn't always just hand out this every time it does this pattern, right? So throughout the day, what you're trying to capture is that moment where it's about to be orderly, methodical, and do what it's supposed to, right? But that's not all day. That's not all the time. It's not even most of the time. Most of the time, it just seems like random craziness, and it makes no sense. And why isn't this working? And why isn't this doing that? And the reason traders get frustrated and the reason they struggle is, I don't know where it came from, but in their minds, somehow they thought, well, every day I sit down at 9:35, this bar is supposed to follow through and give me profit. No, it isn't. Right? It's not supposed to do that every day. Or this would be so easy that everyone would do this and not do anything else. Right? I mean, why would you? If you could sit down and in 10 minutes, like, yeah, I just made $2,000 today in 10 minutes. I do this every day. It works like a charm. Never fails. Then why would you do anything but this? And everybody would quit their jobs and the whole world would go into the toilet because nobody would be working anymore. It'd be like we're back in COVID where the government's just sending money to everyone. Like nobody wanted to work. I'll just stay home and getting paid to do nothing. So it's hard to do this, okay? It's supposed to be hard to do this because if it wasn't, the rewards would not be as great as they are. If everybody could play quarterback in the NFL, they would not make $40 million a year, right? If everyone could do it, they get paid nothing. Because they're like, man, there's thousands of guys that can do your job, so it's not worth it anymore. But because there's about 10 people that can do it at an expert level in the entire world, they make a lot of money. All right? If everybody could sit here and crank out profits in day trading, it would be harder to make money. But it's difficult to do for most people, right? And a big reason why is their bias when they come into this. Their mindset is not correct. They think it's going to be easy. They think they're going to learn some magical pattern and that every day it's going to work. And I'm telling you up front, it doesn't work that way. All right? And I'm not trying to like be Debbie Downer here and make this super negative. I need your mindset correct. Trades fail. Good patterns fail. That's part of it. Right? And the reasons, like I said, the market at most of the time is random, chaotic noise that sometimes produces repeatable patterns. Right? That's my best summary of what the market is. So what your goal is, okay, is to find those moments where we want to trade, we want to take setups based on what usually happens most of the time. Okay, you gotta, this is recorded, so you can play this back as you need to, and you can take notes over and over again. All right. So if I said something you missed, it's okay if I don't repeat it because it's recorded. Right? You can play it back. But I will say that again because it bears repeating. You want to try to get your mindset and your trading plan set up where your goal is to trade what should happen most of the time, because nothing happens all the time, and we don't want to try to take trades that might happen some of the time. Okay? There's a difference between what should happen most of the time and what might happen some of the time. I call it the 80-20 rule. All right? I want to focus on trades that I believe, based on historical performances, 80% of the time, this is what should happen in this moment. Right? Now, can I prove to you it's 80? No, maybe it's 72.9 or 83 points. I don't know. I'm just telling you it's a high percentage more than half. Okay? And what I don't want to do are the ones that feel like they're 2 out of 10, the 20 percenters where, look, you can take that trade if you want to. It usually doesn't work out well. And if you want to try to be the hero and you have the ego and you want to prove you're right and you want to say, hey, I'm taking this anyway. And then when it works, you want to thump your chest and be like, look, I told you this worked. Good for you. And the next 9 you do and you take L's, big losses, then make sure you pound your chest on those too. All right? So I've let go of the ego a long time ago. It's when I finally started making money. Right? I got over my own self, my own bias, my own arrogance, my own need to be right, all the stuff I had to work through. And this is the point of view that I'm bringing to you today. Right? That to find success, my belief is most traders start off with the wrong mindset before they even learn charts. Okay? So I need your mindset right before you even start thinking about looking at charts, because it bleeds into it, right? Then you get I see it every day in the chat room. You get a pattern, you get a bar. The first question posted by a new trader, hey, I did this 2-minute thing. Why didn't it work? Like, what do you mean, why didn't it work? Because they don't work sometimes. Like, they're shocked that it didn't work. because they saw Oliver do it perfectly. So now they think, oh, well, I just have to do that every day. And they're like, well, why didn't it work? I'm like, well, that's probably not the same trade he would have done, number one. He's been doing it 35 plus years, number two, and you started yesterday. So how is that a fair comparison? Well, why didn't that work? Okay. The other thing that I want to get through to everybody is context matters. All right? Context matters. You cannot take a setup out of a vacuum, right? And then say that, well, this always should be the play then. Okay? When you learn a concept, right, or a principle in a vacuum or in the classroom, meaning we're not live in a market, we're looking at one thing, is to teach you the fundamental concept. Make sure you understand the theory behind it. Now, when you apply it to a live trade and a live market, you have to account for everything else around you. You cannot be so naive to say, oh, I just need to look at one bar in the middle of the trading day and that's it. I can ignore everything else I learned, right? The course is over 2 days long, right? The 2-day course. And the manual that comes with it, when you print it out on your PDF, I believe is, I don't remember, 300 pages or so, something like that, give or take. So you can't just say, well, look at this, a green bar, I'm done. I found a green bar, that's it, my day's over. I can just go make money. Like that's crazy, guys. It can't be like that. All right? So you have to learn the concept in a simple environment, right? If you're learning Spanish or you're learning Portuguese or you're learning Italian or whatever language you're learning, yes, you're going to learn basic words first, right? But you have to learn how to speak the language eventually. You can't learn 3 or 4 words and be like, I'm ready for my trip, right? I'm going to Colombia to speak Spanish, and I've been taking it, I did babble for about 20 minutes on the plane. I'm good to go. What are you doing? No, you're not. Can't speak the language because you learned a few words. You listen to a couple recordings on Babbel, so now you're a fluid, you're ready to translate? Like, nobody would expect that, right? People would laugh at that. But somehow, when we want to trade, like, yeah, no, I watched the video this weekend. I'm good. I got it. No, you don't. You don't got it. Right? It's going to take time. You're going to have to put in the effort. You're going to have the fundamental knowledge down so solid that when you go to apply it in real time, the context that comes at you, meaning everything else moving around you on every time frame, doesn't overwhelm you so much. But if your fundamentals are shaky, now you add the live market and the context around everything, and you get lost, and it just feels overwhelming. Right? Eventually, it slows down. Eventually, it's easy enough to process everything in real time, and then it's just up to you to repeat what you're supposed to do when you're supposed to do it. That's really what it comes down to. Right? In the trading plan seminars, the first thing I tell traders, do you know what you're supposed to do? Can you clearly identify, this is how I'm supposed to trade? This is the strategy. This is the setup. This is the entry and exit. This is the target. Like, do you have that clearly identified, all aspects of your trade? And if you don't, then you already have problem one. You got to go fix that, patch all those holes. Now, number two comes into, are you actually doing that? Every step followed to the letter. And if you're not, there's your trader psychology problems. Figure that out. So once you read charts, it comes down to you. But I understand if you can't read charts and you're dealing with yourself, then the whole thing's a mess. Right? So if I get your mindset right, I think you already have a leg up on most people, because most people come in with this unbelievable, unrealistic expectation of how successful they're going to be and how quickly they're going to become market masters. And then that leads to senses of failure, right, or disappointment when it shouldn't, right? Like, the best comparison I can give you is most people know this, and if you don't, I'll tell you. If you want to be a doctor, it's about 8 years of total schooling, maybe more, okay? So nobody goes off to be a doctor and then in 6 months comes home frustrated because they're not a doctor. None of the family members start pestering them about why they're not making money as a doctor because they look at them and say, well, I just went to school 6 months ago. What are you talking about? It takes 8 years. Right? But everyone knows that, so they accept it. For whatever reason, people believe that traders are going to be millionaires in a month. Right? Now, moments like what happened with GameStop, there's a movie out right now on, I think it's Netflix, one of the streaming services called Dumb Money. Pretty good. You should go watch it, right? People did make millions of dollars in like a week, okay? So there are flukes in the market where you can make crazy amounts of money in a short time, but they're one-offs. Like I said in the beginning, that is not what happens most of the time. That is not how you're going to trade, okay? It does take time. It does take work. It does take effort. So if you have this notion that you're going to be a millionaire day trader next month, probably not going to happen. And if you start getting discouraged and frustrated and feeling like a failure because of it, that's not fair to you or anybody else. All right? You have set an unrealistic expectation, and then when you fail to reach it, you're having feelings that are not justified. Does that make sense, guys? Like you're creating your own problems because you're setting crazy, unrealistic goals. All right? And now you're losing sight of what's important, which is process to get the outcome you want. You can't worry about the end goal and create, like, because I see people do it all the time. I've seen traders that show me, well, here's my projected stats for 24. And I'm like, really? How do you know how you're going to do in 24? Well, if I do this month and this month and this the next month, I can graduate and make up my deficit by that month. I'm like, wow, man, you're so down the wrong road. Like, how about we worry about next Monday, I am going to make sure that I stick to my plan. I'm going to take these trades when they set up. I'm going to trail it this way, and then I'm going to see what the day results. I'm going to journal, make notes, and then on Tuesday, I'm going to do the same thing. How about that's your thought process? You're telling me about what your projected totals are month by month for 2024. I don't even do that. Right? I mean, I have an idea about what I'll probably do, but I'm really, when I sit down on Monday, I'm worried about Monday. Monday at 9:30. What am I going to do in the next 2 to 5 minutes, if anything? And then after that, what am I going to do in the next 5 to 10 minutes when we get to 9:45? And then if nothing, is there 10 o'clock data? All right, what am I doing at 10? That's it. I'm not thinking about the afternoon. I'm not thinking about tomorrow. Never mind the next 12 months. You have no idea what the market's going to do in the next 12 months. Nobody does. There's no way to know that. So with day trading, you get the gift of only having to know what's about to happen or what you think or what should happen in the next few minutes. And that's all we need to know, right? You have a much better idea of what's going to happen in the next few minutes of your day, and still not always, right? But it's a much more predictable thing than it is trying to predict what you're going to do next December. If I ask you, what are you going to be doing next December 2nd, 2024? I mean, you could guess, but if I said, what are you going to be doing December 2nd, 2023 at 9:45 or 10:45, 15 minutes from now? You say, I'm probably going to be sitting right here listening to you. And you'd probably be right. Now, what if you have kids and one of them starts crying uncontrollably at 9:43? Now, all of a sudden, you're not going to be here at 9:45, are you? You're going to go check on your kid, and you're going to miss 9:45. So you had it planned out. No reason to believe you wouldn't be here. Something happened. That's not what was supposed to happen. Just got changed. Nothing in your control. Right? Somebody rings the doorbell, won't stop ringing it. You look through your little ring and you see who it is. You're like, oh man, I got to sign for that package. I've been waiting on that package for 6 weeks. Damn it. I got to go sign for that real quick. Well, 9:45 came and went, or 10:45 came and went. You weren't here. Something you didn't know was going to happen that usually doesn't, suddenly did, and you had to react to it. Okay? The market does the same thing, guys. Even on a 1 to 5 minute basis, there are moments where even though we are sure, look, this is what's supposed to happen right now, and then suddenly it doesn't. right? That's just how markets work. You're never going to be right all the time. So get your mindset right, right? Get your beliefs about the market straight. Make sure you understand the environment that you're trying to participate in. Know the rules for that environment. Set your expectations based on that environment, and the journey becomes a little easier. All right? But if you set unrealistic goals and think somehow you're going to come in and control the market and you're going to get everything right every time, I mean, man, you're just setting yourself up. Like, that's brutal. Right? Like I don't know who's the heavyweight champion of the world right now. It's also Tyson Fury, I think, but whoever it is, the heavyweight boxing champion of the world. And I'm going to go in and I'm going to have a sparring match against him. Okay? Is it a realistic goal for me to think I'm going to win? No, it's not. Is it a realistic goal to think I could survive and not get killed? Depends on how long the match is going to be. Because if it's more than 30 seconds, I'm probably going to die in the ring. Right? But would it be realistic to say, you know what? For 20 seconds, I probably could run, duck, roll on the ground, and maybe not get killed. And that's a survival. And that, to me, is a victory. I went 20 seconds with the world champ and didn't die. That's a realistic expectation if I'd never boxed in my life. You understand? Like, that would be, and be like, you know what? Yeah, you might be able to do that. I'd give you that. Okay? That's setting a realistic goal based on the environment. So if you have never traded in your entire life, have no experience whatsoever, never seen a chart, don't know anything about the market, but yet in 30 days you're going to be a millionaire. It's the same thing as saying you're going to go take out the heavyweight champ. This crazy thought process. Now here's the difference. Even if I trained every day and I was younger and in my prime, I still have a very unrealistic chance of being the heavyweight champ because it involves a physical component. It involves a strength, endurance, the ability to want to get hit, things that are not in my nature. Okay? So I'm probably not going to be, even no matter how hard I worked, it's an unrealistic goal. As a trader, there's nothing stopping you from putting in the time and the effort to become good at this because there is no physical requirement. Right? I always make sports analogies because I think it's such a parallel with trading from the psychology standpoint, but sports involves physicality. You either have the gift or you don't. And then if you have the gift, you can train it and become excellent. In trading, you don't need a physical gift. Nobody has to have the genetic gifts to be a great trader. You can develop your mind, you can develop your psychology, you can learn to read a chart, and then it's you against you in the end. That's why I love this game. Right? It does not require the things that sports require. I might love basketball, but I'm not tall enough to play. I can't jump high enough. I can't shoot far enough away. I love football. Not big enough, not fast enough. I'd probably die on the field, right? I love baseball. Played it, but not at that level. Love golf, and I'm good at it, but not at that level because I don't have the gifts and the physicality that's required that these other athletes were given in trade. But trading, man, I can sit down and I can go head to head and toe to toe with anybody because I've learned how to play the game. I've learned how to get out of my own way, right? I've learned the things I need to do, and it doesn't require strength, size, speed, endurance. None of that matters, right? Which is why I think a lot of you are attracted to this game in the first place. It's a competitive arena. It is a chance to make money. It is a chance to change your life. It is a chance to make a living forever. Freedom, go where you want, do what you want, work when you want. All that exists. But because all that exists, it's really hard to do this. Right? So just get your beliefs, I think, straightened out a little bit before you start. Set goals at a more realistic level. And I think this becomes a little bit easier, right? Because you won't beat yourself up after 30 days saying, I can't believe I'm not trading. Can't believe I don't have this yet. It's been a month, man. It's been a month. What did you expect it to be? And I've actually asked traders that when they're frustrated, right? Well, what was your expectation here? And sometimes they don't want to tell me because they know it's going to sound ridiculous when they say it out loud. Sometimes they say it out loud and they don't think it's unrealistic to have that goal, right? So then we have to talk about that. And I have to give you comparisons like this to make you see it for what it is. And usually then it will come back around a little bit. So anyway, now that I've given you the preamble here, right, a little 30-minute warm-up, and it's important because this isn't said anywhere. This usually gets said in bits and pieces in the chat room, and it might take you 3, 4, 6 months to hear it all. Now it's in one place, right? Now you have it all in one place, and you can go back and listen to it and make sure you're on board with that. Because if you're not, it's going to be a rough ride, right? You're going to put yourself behind the 8 ball with your goals and expectations. It's going to make it that much harder. Right? Doctors don't get frustrated in 6 months of college saying, I can't believe I'm not a doctor yet. They already know. All right. All right, let's get some pictures going here. Let's talk about some things. All right, I will tell you when the camera is up, and then you tell me if and when you see it. All right. And I am still sipping on my iced coffee this morning, so I apologize in advance if you hear sipping sounds. Okay, the camera should be up now. Right? You should see the screen. If you don't see the screen, do a refresh. Translators, are we good? Is it projecting in your rooms properly? Okay, excellent. All right, so the most important thing we're going to talk about is this. I mean, today we're going to talk about everything that's important, but the most important thing is to understand the first rule or the first market law, right? The way Oliver put this together, I think is great. And guys, here's what happens when traders want to go through the material. They want to rush through it, and I get it. You want to finish it, right? I just got this book. I want to read the whole book. Just knock it out, right? I just got this course. I want to watch all of it. Just, all right, I saw it. I completed that. And I think you should. I think you should go through the whole thing. The first time, just right through it. Then the second time. Then the third time. Then the fourth time. And keep doing it over and over. I've taught the class over 50 times at a minimum. I know this stuff so backwards and forwards it's not funny. Okay, but part of it was from teaching it, right? When you say it and you show it and you own it, right? When you just read it, maybe you got a little bit of it. Then you hear it, maybe you got a little bit more. Then you trade it, maybe you got a little bit more. But you got to keep going through it, guys. It seems silly, it seems basic, but it's still missed, right? Right here, the first market law, the very first one, and this gets missed all the time, all right? Where's my, oh, I got to do this. I'm going to take screenshots while we're projecting, and then that way I can draw on my screenshot if need be. So bear with me as I do this. All right, right here, gets missed so many times, okay? Moving market environments. Moving, not sideways, choppy, listless, blah, is just sitting there. You have to have momentum, guys. We are day traders. We are not swing trading in this class. Now, we have swing trading. That's a different animal, right? There's portfolio management. There's trade for wealth, right? Oliver does long-term stuff with you guys. That's not this. He's not making decisions today because of market movement for the next 5 years. It's different, all right? But when you're day trading, when you're looking at 5-minute bars and 2-minute bars and 1-minute bars, we got to have some movement here. We're not buying things to sit and wait, right? We're in a wealth play like, hey, guys, look, we're going to start accumulating this in these levels. and 3, 6 months, 12 months from now, this is where we think we're going to be. You don't have that luxury in a day trade. You need it moving. You needed momentum in the market. Patterns do not work when there's no motion behind them, right? The 3 to 5 bar law, the 5 to 8 bar law, the patterns of trends, the breakouts, the follow through on single bar ribby gibbies. All that stuff is based on momentum, and momentum is big money buying and selling, right, at a rapid pace. When big money comes in, right, when the whales come in, if you will, when they start pushing order flow through, and it's not one person. I don't know where, you guys got to understand, a whale is a symbol of big money, an institutional buyer or seller. And the institution is representing lots of clients. There is not some guy out there buying 8 million shares of Apple, right? So it's a concept of, hey, there is a ton of order flow being pushed through this stock right now, right? It's creating a sense of urgency. It's creating a lot of people wanting to jump on board. This thing is moving. It has momentum. But if it's not moving, why are you trying to trade? I cannot tell you the number of times. It happens every day, dozens of times. Trader will post a trade. My first thought when I look at the chart is, this thing is dead in the water. Why are you doing this? It's not moving, right? If it's just sitting there, if it's in a range of support and resistance, it's not broken out. It's not even at the top or bottom of the range. And you're trying to manufacture an idea on a 1 or a 2 minute chart about, ooh, a green bar took out a red bar. But the overall picture is, but this thing is dead. It's not moving at all. It's sideways. It's sitting there. Why are you trading this? When things are moving, it's easy because follow through happens more often than it doesn't. Okay? That's the first thing, guys. So many times, if you would just wait for true momentum to show up, trading is easy. How many times, let me ask you, how many times have you done a trade? And you're not going to be able to see the answers, so this is just for you to think about, and you can post if you want. No one's going to see it. But how many times have you been stalking something and got antsy and it wasn't really there, and you tried, and you got stopped out a bunch of times, then suddenly this thing just rips, and you're like, oh, man, I knew it. I knew it. If I had a bigger account, man, I could have stayed in there longer if I had more shares. No. You were early. You were there before the momentum started. Or you were late. The momentum ended. And now suddenly you want to get in. Like, hey, there's 6 5-minute bars in a row. That looks like a strong move. I better get in long. Wait a minute. That's the 6th bar up. You sure? Are you sure now's the time you want to be in on that? Right? Like maybe you want to wait for the next setup. Okay? But it has to have momentum, guys. You are day trading. You're not swing trading. You are not buying something to hope in 20 minutes it starts moving. And if it's not moving now, why are you trading it? It's the first one. Why do you think, right here, I'm going to have a little fun today, guys. Okay? Been up early. Been pumped up on this. There's no trading going on in the background, so I'm going to have some fun with you. It's numero uno, number 1 market law, right there. It's not number 4, number 6, it's the first thing. Why? Because it's the most important thing. Because without it, everything after this page becomes irrelevant if we're not moving. If we don't have momentum, why the hell are we in a trade? We are not getting in trades to hope that something starts moving, right? It better be moving or showing us the sign. Hey, there's the sign. Momentum's about to start. This just happened. That usually kicks off momentum. Let's try to get it. But if we're not moving and we're stuck in slop and we're trading just to trade at that point. Now we're in a poor mindset, a novice mindset of, you know what? I'm a trader. I'm supposed to trade. No. You're a trader. You're supposed to preserve capital and not lose money. That's the 2 things that a successful trader is supposed to do. Preserve their capital and not lose money. What happens if you do those two things is you make money, right? The result of those two rules being followed religiously, consistently, day in and day out, the result of that is you make money because you're eliminating the other two things that take your money away from you, right? Focus on preservation of capital, eliminating risk, controlling the downside. If I do those things, I make money. When all I'm worried about is trying to force a trade because I have to make a profit because I'm a day trader, now I'm going to lose money. My focus is in the wrong place. Okay? So let's get our minds right now. We're gonna stop trading garbage. Stop trading crap that is not moving. Stop trading borderline setups. Right? Stop trading just one piece of a pattern. Don't get me started on that. I'm gonna go off on that today too. That's driving me crazy lately. You got too many people find one thing, just one little thing, like, oh, that's a buy setup. Why is that a buy setup? Oh, red took out green. Or green took out red, I mean. Like, and? Since when is that a buy setup? And we're gonna go through this because nowhere in here does stuff like that happen. But yet, somehow we take it and we just take this little snippet and be like, oh, yep, there it is, I got it. I'm forgetting everything else that I saw. I'm forgetting everything else I was taught and told and heard about that. I'm just taking this little sliver and I'm going to run with it. Guys, it happens all the time, right? It's not your fault. I'll give you a little Goodwill Hunting. It's not your fault. It's okay. It's not your fault. Right? It's human nature. You focus in on something that you understood, right? You focus in on something that you really liked, and then you wanted it to be like, ooh, if I just do that, I got it. And then all of a sudden you block out everything else. Okay? And it happens in the room every day, right? I get it from traders saying, Oliver said this. I'm like, yeah, sort of, maybe, kind of, but you left out about 80% of what followed that statement, right? And then I've had traders say this, Dr. Dan said, I'm like, well, seeing as I'm Dr. Dan, I'm pretty sure I never said that. It's like, I didn't say that. Right? I made this statement and you took part of it and you remembered the part of it, okay, that you wanted to say. And so I do things like arrows and circles and making things really big, and people laugh like, dude, why are you doing that? I'm like, because you guys miss it sometimes. You don't hear it, or you hear what you want to hear, right? Like, do you remember, not everybody in this room right now has done a trading challenge yet, and maybe one day you will. But for those that have done it, I have made it abundantly clear, right? And when we do the overview and we talk about the credit that you would earn if you win to reduce your deficit, right? You could get a fresh start even and make 100% of your deficit go away if you had a top prize. Or you could earn a 50% credit reduction. Or you could get your entry fee applied as a credit to your deficit, right? I have made this abundantly clear. It's capitalized. It's in different color print. I say it in the recordings, okay? And those of you who know this, just got an email the other day. You ready? I'm going to read this part of the email to you. I'm not going to say any names, but this is why I do it that way, and this still happens, okay? The trader said, I just participated in the challenge. I believe Dr. Dan stated that any winnings go to future products, services, or programs. Please advise how to redeem my credit. What else do I do at that point? It is 100% the opposite of what I have said and stated and put in writing and recorded and have it bold, underlined, different colors on the slide, and yet this trader heard that they can redeem credit prizes for other products and services. I don't know what else to do. So sometimes you're just going to hear what you want to hear, right? You're not going to hear what I actually said. You're not going to read what's actually written. You're just going to do what you want and hear what you want. I can't help that. So sometimes you have to go through this enough times and then you have that aha moment. All right. That's another thing that's very common. Traders will finally see this, right? Whatever the lesson is that I'm doing, whatever I'm talking about at the moment, and they'll say, "Oh my God, I get it, I see it. I wish you told me that 6 months ago." And I'm like, I have said this every day, at least once a week for the last 6 months. You have been in this room every day for the last 6 months. So you finally heard it. You finally opened up your mind and it clicked and it registered because you have the experience now to tie the lesson to where it made sense. Where before you didn't have that, right? You just had some ideas. You just had some lessons in your head floating around, but there was no experience that your brain gets to go, hey, remember that thing you was talking about? That's this right now. Right? Which is why when listen, if you guys are here and you're not active at the moment and you're taking a break from trading because you're just going to review the manual and you're going to do this, that's okay for like a couple days or a week maybe. But when I see traders say, look, I'm going to take a month or two off, I have to study harder, it's the worst thing you can do for yourself, man. You've got to be trading, right? You have to put process in play. You can't learn this stuff by looking at it. You've got to do it. Now, I need a break mentally. I'm burned out and I'm frustrated. I got to reset. That's fine. But if you think, no, I just need to study. Like when traders say, I'm going to spend the first 3 months just studying the manual, you just wasted 3 months. You understand? Like study the manual while you're pushing buttons, right? Just push buttons on a stock that's not moving very fast, right? Nobody said to go in and trade NVIDIA on your first day. Go in there and trade Citibank, trade Wells Fargo, do 1 or 2 trades a day while you're studying. But don't waste 3 months not doing trades, right? You don't have to go over the top and do 100 trades a day if you don't want to, but not trading is not going to make you a better trader. You understand? So you got to do. Traders have to do. So you can do it slower. You can do it small. Nobody said you had to do it big, right? You don't have to blow yourself out with a daily loss every day while you're learning. But the idea that taking time to learn before you start what is the best way to learn a language? It's been proven. The best way is 100% immersion training. That is the best way to learn a language, right? But which means you are dumped in the environment and it's just all in on day one, right? So the schools that teach it properly, if you're like when you go to private schools, they don't do this in public schools, I don't believe. When you go to private schools, boarding schools, and you're paying ridiculous money for elementary education, the teacher comes in the room and does not speak your native. So you want to go learn Spanish and you only speak English and you sign up for Spanish, there's no English spoken from day one. And it doesn't matter that you don't know what's being said. You just sit there and you're like, I have no clue what just happened today. And then on day 2, they do it again. On day 3, they do it again. And if you keep showing up and you're paying attention, guess what starts to happen? You're like, man, I've heard that before. And when I hear that, then he points at this, or he does that, or she does this. If it's whatever, who's teaching, male, female, doesn't matter. If the teacher is saying the same things enough times and you hear it and you start to associate something with it, you get it. And all of a sudden it clicks. And you know what happens after that? You never forget it. Like once that association happens, it's yours. You don't lose that. But if you just memorize some vocabulary words on a list and then you went and took your Spanish quiz on Friday and got 100 and then you didn't use the language and you didn't hear it, 2 months from now you forgot half those words and you never really learned how to speak the language, right? This is why the way languages are taught in certain schools in America are terrible, right? In other countries, I've heard they do this much more so. But in the U.S. and public schools, this is how they try to teach language to kids. It's terrible. It's not helping them at all. All right? So where my kids are going, the Spanish teacher, she speaks Spanish. She knows English too, but she doesn't talk to the kids in English. So when the kids come home sometimes, I say, what'd you learn today? They're like, I'm not really sure. I think we learned this, but I'm not sure. So then sometimes they'll look it up, they'll Google it, and they'll be like, I knew that's what she was saying, right? They're motivated to learn that way, and they'll get it, and they'll own it, and they won't forget it if they keep hearing it. So when I'm in the chat room and a new trader writes this email and complains that Dr. Dale was going so fast and he was using words I've never heard and he was talking about this and I don't know what that is and I can't focus, I'm like, okay, welcome to immersion training. This is the best way for you to learn, I'm telling you. But they want me to slow it down and talk to them like it's their first day and then what is a green bar? That's not how you're going to learn over time, right? And I have proven this because every new trader that comes into the room after the first 30 days, they're like, all right, I kind of think I get what you're saying now compared to the first week. After 60 days, they're like, I got most of this figured out. And then after 3 months, like, yeah, all right, I got it. I get what you're coming from. And now I'm ready to learn. And then 6 months down the road, they're like, man, could you stop slowing down and going over beginner stuff because I'm ready to roll here. And then after a year, forget it, man, they got it. But that first week, it's the same thing. So unless they're ready for what's coming and they understand what immersion training is all about and why it's the most successful way to learn a new language, and don't misunderstand this, the market and reading charts and reading level 2s and understanding patterns, it's a language, guys. It's just in symbols, in numbers instead of letters, but it's a language. So when somebody goes, how did you see that in level 2? I understand the language. I've been studying this cryptic, weird language for 2 decades, so I can read it. And even then, there's sometimes I see stuff I haven't seen. I'm like, oh, didn't see that before. Didn't know what that was. Or, oh, misread that. Thought it said this, and it wasn't. It's not a perfect thing, but I can do it better because I've been immersed in it for so long. So trust me, it is the right way to learn. You may not like it at first, but over time, it's the right way to do it. Okay? So, rule number 1, moving market environment. Let's have one, or let's stop playing. Right? Let's just stop doing stuff if we don't have that basis. Okay? All right. The next most important thing that you have to learn and you have to understand is the market cycle. Okay? This is a very basic concept, but it is so missed so many times, and it's forgotten about or ignored or taken for granted, right? So I'm going to spend some time making sure that you understand market cycle, right? Every price, every stock, every instrument you trade will go through a wave pattern. And I don't mean Elliott wave, I don't mean Fibonacci wave, I just mean the basic, most simplistic wave pattern, right? Now, I am not an artist, guys. It doesn't need to be perfect. So when I just start drawing stuff, just roll with it, okay? So a wave pattern does this, okay? Just up and down. It just moves in waves. Now, sometimes the waves have sharp movement, right? And it's sloped in one direction. Sometimes it has sharp movement and it's sloped in another direction. Sometimes it has slower movement. It's not as sharp. Okay? Sometimes it has little bitty pauses in it and then continues. But make no mistake about it, every single time it is a wave pattern. It is a market cycle. Okay? And it repeats over and over. Now, this is how it was doing it all day. There's no trend to this, right? It's repeating a pattern in a sideways range, right? There's no slope, okay? It's just sideways. Now, if I take this same thing, if you can envision this, right? All I'm going to do is I'm going to take this end of the wave and I'm going to pull it in this direction here. And I'm going to take this end of the wave and I'm going to pull it in this direction here, right? So I'm going to turn this thing on an angle. So now what we have is an uptrend, right? All I did was take that same thing and I shifted it this way. Still the same thing, it's just drifting in that direction. Okay, if I did the opposite and I took that bottom end and lifted it up and this top end and pushed it down, now we have this action. Okay, downtrends. We still have a wave pattern. Right? That's market cycle. So in its simplistic form, if we pull out one piece of a wave, right? We just take the famous bell curve. We pull out one piece of the wave, okay? I'm going to use green for buys and red for sells. So whether it's a buy to cover, buy to enter, sell to initiate short, sell to take profit. All right. Anytime I draw green, you're thinking buy order. Anytime I draw red, you're thinking sell order. Okay. So ideally, our buy portion of the bell curve, this would be super early because there's no momentum, right? This would be guessing. Rule number one is not applicable in this part of the bell curve. There is no rule number one yet. So ideally, we are trying to get this, in this kind of general area where momentum is starting. We have momentum, right? Because there's no pullback here, this is one single wave. You don't start buying here, right? You don't start buying up here. That you're late, you've missed it. This is not a buy. This is a sell area, either here or here. Profit taking or profit taking. Depends if you were into the resistance and the target or trailed out of the target. Okay? That would be the profit taking sell areas of the bell curve, right? It would not, however, be initiating a short area because you are anticipating momentum is still up, right? So your initiation part of the bell curve would be in this area of the wave pattern, right? That would be where you're thinking about if you're starting a short, it should be this side, not on the way up. Price should be at least moving down when you short. Price should at least be moving up when you buy. You don't buy price as it's falling. You don't short price as it's rising. It's going to get you in trouble. You don't have that kind of account. You don't have tens of thousands of shares you're trying to get out there. You got a few hundred, maybe 1,000. You need to do this with momentum on your side or you're going to get killed. Your accounts will get just destroyed if you fight it. All right? On the way down, this again would be a profit-taking point of the curve, but not a buy initiation point. All right? So this would be an entry portion. This would be a cover. So this would be an entry portion. This would be a covering short portion of buys. Okay? I'll put those other reds back up here too for a minute. This would be a profit-taking section here of a long trailing out here on a short. This would be initiation of a short, not here. And this would be buying part of the curve to take profits, not starting a trade. All right, now if I flip it so we can do the other side of it, we'll reverse the curve. All right, and we'll go this way. We'll do a down curve. We'll come back up out of it. All right, so right here on a down move, there was no momentum. And now if we're looking for this thing to start, we're trying to catch whoops, I need red. We're trying to catch momentum here. This is where we're starting shorts. This is not a good area to start my short. I'm way too late in that move, right? So if this is the fourth and fifth bar, you missed it, man. You need this to happen. Okay? You got to let it reset. Does not mean, guys, look, don't get confused that this is just one little piece of a wave. This does not mean the trend started here and had 100% retracement, right? I'm going to put bars, excuse me. I'm going to put bars and candles and stuff behind this in a second. All right. I'm just trying to get your thought process right. So that would be catching the momentum. This would be, okay, we've extended on that first run or second run, however many runs we're on. This is not where I start shorting now. This is where I would be looking for potential buys for profit taking in this area. Okay, then we're bottoming and turning. I'd be looking for trail out. Okay, this is trail out buying from my short or longs for my counter. Right? But I would not start shorting down here. Okay, and then the sell, if I'm doing the counter section, this would be profit taking sells in that part of the trend, but not shorting sells as we're way up here. We've missed it, right? We need to let it reset. Okay, that basic concept of market cycle repeats over and over and over. And if you remember it, right, you will get yourself in a position where you will not chase trades. Okay, you will not chase entries anymore, because what happens, right, is this starts and you didn't short right there. Okay, you didn't do it. You didn't make those entries. Okay, so you then see the momentum at the bottom and you're like, oh man, look at that move. You should have been short already. You weren't. Now right here where you should be starting to look to take some profits, you don't. Right? Because you're late and you just now saw it and you're like, oh, I should have done it there. And now you jump in short. And what happens? You shorted the bottom. And then what you should do when you realize it is go, oh crap, and you should cover here for a break even. But guess what? You don't do that either. You let this thing go and you start hoping it's going to turn over, and you hope it's not going to start to retrace too far. And then right there where you should have been taking profits on buy setups for the counter long, you end up having to take the buy setups to cover that horrible short idea that you had. And now these buys become L's from that short. See how it's out of whack? You're trying to short that and you're covering here. It should be the inverse. You should have been shorting up there, covering here, long here, taking profit there. So when you're constantly chasing the market cycle, that's what gets you that feeling, right? So if you have that feeling of every time I buy, this thing goes the other way, and every time I short, this thing goes the other way. Okay, if you ever have that feeling, the chances are one of two things is happening. You are either completely out of whack with a market cycle, or you're ignoring rule number one. Okay? Either there's no momentum, and that's why you're getting banged around, or you're out of sync with the market cycle, right? So again, if the trade goes like this, right? I'm just going to give you general concept. If the trade goes like this and then pulls back and then goes like this and pulls back and goes like this, if that's what produced on the chart, as you look back at your entries, right, you should see buy entries in this area, in this area, in this area here. If you're seeing buy entries there and then getting stopped out, and there and then getting stopped out, and going, man, every time I buy it turns over. Well, why are you buying at that part of the momentum? Why are you buying it that late into the cycle? What are you doing? Right? If you're here and here, yeah, it's probably turning over right as you buy it. It's probably what's happening. Okay? Or you're buying it too early on the pullback and you're getting stopped out. Right? So these are the sections where you should be looking to buy. If you're buying here, you're late. If you're buying here, you're late. If you're buying here on the first sign of a turnover, you're early. This is not the buy section of the pullback. Okay? Where should your sells be on this uptrend curve? Profit taking should occur anywhere between that range and that range. Now, I'm not talking about pivot trails right now. I'm just talking about if we're capturing momentum phases, this would be profit taking on the way up or on the turn. This would be acceptable shorting. This would not. That's too much anticipation. Okay? Same thing here. You'd be looking to take profits. If ideal, this is an ideal world. Now, maybe you hit a profit target here on the curve. That's fine. If that was your profit target and you already hit it and then it went further, so what? You don't chase it. You're like, hey, I got some out there, there, and there. Or I got all of my target there and it kept going. Who cares? Right? Be on the right part of the curve. So profit taking and or trail out on this side, and this could be a little counter move on the way down. Those would be the appropriate places for your buys and sells. So even when you're looking at your chart review, I always tell people on our platform, guys, you can, when you trade, right, you get the dots, we call them, they're little triangles, right? And you get entries and exits that show on your chart. So you want to have this look of the blue dots are buys, okay? They're not green, they're blue. And the red dots are sells, okay? So whenever you look at your execution on your chart, as a general rule, if you drew a line between the entry points, right, you should have the red dots above the green dots or the blue dots, right? If it's up and on the way down, same thing. When you're seeing it on the wrong side, that's telling you you're not following the market cycle very well. So it doesn't matter if it's an uptrend, and I'll do the downtrend because people, I get lazy sometimes and say, oh, it's the opposite. Well, I know that not everybody sees things the same way. Some people see uptrends better than downtrends and vice versa. So let's play this out the same way for you, all right? So you clearly see it. So if I drop and then I rally, I drop and I rally, and I drop, all right? If that's the general premise of what's happening, okay, the trend is underway, we should see most of our sells either early in the momentum, right? So I shorted, and now I'm rallying back, and then I'm going to try to catch this wave here, and I'm rallying back, and I'm going to try to catch this wave here, right? And where should I be looking to buy? Hopefully right as it either hit targets and I'm away from where I shorted, so I profit, or the counter move would be here, right? Away from this, I have targets. The counter move would be here, right? Where would I not want to be shorting? Were these bars. I don't want to short on the way up. Where do I not want to buy? Way up here. I'm late, right? So that premise, this is what market cycle means. Where are you in the cycle? So you can be in a downtrend, right? Does not mean you cannot do a buy setup, okay? So if you're in a downtrend, doesn't mean you can't take a buy. It would be a counter trend buy, right? So it would not be a buy setup in the trend. You would not have a rising 8 and a rising 20 in a downtrend, right? But as far as the pattern of 3 red bars or more and a green bar or a tail or whatever kind of bar we have takes out the other bar, right? And we'll go over this a little bit later when I get into, we'll actually look at some patterns and some bars. Right now I'm getting concepts straight so that newer traders are on the right track, and even some people been around maybe still have this twisted up a little bit. Right? Before even looking at patterns, you've got to get this down. Okay? That's what you got to know what you're trying to do. What are you trying to accomplish? Okay? We don't want to be late. If we miss momentum, we wait for the next phase of the market cycle. All right? Because one of the biggest things is chasing trades, and then you get out of sync, and then you're constantly chasing the battle, right? And that's why it feels like, God, I can't get this right. It's always messing with me. And here's why. The trade started and you weren't sure, but it was right. You were right. That was the start of momentum, but you weren't sure, so you waited. And then it went to here and you're like, oh man, I think it is. I think I am right. And then you're like, yeah, but I missed it. And then it gets to about here and you're like, God dang it, man. I knew. All right, screw it. I'm getting in. And then right there, you take your buy. And then right on cue, it's a nice, it was momentum. You were right. Right about now, you finally get, yeah, I'm in. And then that happens. Right? And you're like, oh, you got to be kidding me. Now you're mad. Right? Now you're upset. Now, where should the red line have been? Either that should have been a red line for profit or you should have trailed out of that move right there. Okay? So what happens? You take a L. You either recognize you're right and you're like, damn it, I was late, and then you take a L. And now you're mad. Now you say it doesn't work, pattern sucks, trading's bullcrap. You're all mad. You're having a little temper tantrum. You were way out of whack with the market cycle. That's what happened. So if and when that momentum starts, way back here, just starting. Whoops, let me go back to neutral color here. Just started, and you're like, ooh, I think that's it. I think that's it. It's the buy setup, and you hesitate, and then it gets to there, and you're like, ah, shoot, that was a buy setup. And then it gets to there. Your mindset now is, I hope this thing goes further and further and further and gets extended and maybe even climactic so that I can fade it. Because what's coming next, guys? The next phase of the market cycle is what? This. You're only going to be able to capture that moment, or you're going to have to wait for this, and you're going to capture that on the buy. I'm going to do that again and make sure I use the color. You're going to root for it. You missed it. It's over. Stop thinking about a buy at this moment. You need this to happen, and you're going to try to capture it, play a counter move, or you still need that to happen. You're not going to counter it, and when it finally makes its next turn on the next phase of that little bell curve market cycle, now you're ready to jump the buy. Because you were ready here, you just hesitated, and you missed it, and you're mad. And then when it got all the way to there, you couldn't stand it, so you jumped in late, and then you got run over. So you're either waiting and hoping it gets really far up there to play a counter, or if it doesn't get that far where you can't counter, you're still waiting for this to happen. Right? But you don't want it. You get impatient. You're mad that you missed. So when you should have been early, you weren't. Then when you should sit on your hands, you don't. So you're late and you chase it, and then you get stopped out. And now the whole rest of that move, every trade you do from there, you're out of sync. Right? Every trade you do from that point of this wave, you're a mess. You missed it, you're going to screw it up, and then you're going to take like 3 L's in a row, and you're going to be mad, and all of it could have been avoided. If you had just said, man, I missed that first wave. I gotta wait, I gotta reset, I gotta get back in line, I gotta time this. Okay? The best, I don't know if you've ever watched surfing, right? I haven't tried it myself. I'd love to do it one day. If you've ever seen it at all, in a movie, on TV, anywhere, right? It's a great concept with these waves. These guys paddle out and they wait and they're trying to time the wave, right? What would happen to a surfer? You don't even need to know this, just common sense. If he paddles out and there's no waves coming in and the water's just kind of chopping around and he starts paddling toward the shore and jumps up on his board, but there's no wave, what's going to happen? Is he going anywhere? Is he getting the ride? Or is he just going to sit there and then fall down? Or just nothing's going to happen. There's no momentum. He can't surf yet. He could try all he wants. Man, I want to get in 10 runs today. I don't know if you call it a run. I don't know what you call it. I'm going to get in 10 rides, 10 waves. He goes out there, water's dead, calm, nothing. Well, I need a trade. I need to surf. I'm a surfer. Paddle, 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 jump up on the board. Damn it, why am I not going anywhere? And the other surfers would look at him and go, dude, there's no wave. What are you doing? Nah, man, I'm a surfer. I got to surf. And they'd be like, brah, there's no wave, man. Did you hit your head? Like, what are you doing? Okay? And then if the wave already went by and he tried to catch it on the backside, same thing's going to happen. He's going to get wiped out by the one that's behind him. Okay? The wave went by. He missed it. He's chasing it on his board. Paddle, paddle, paddle. He's trying to catch the one that passed him. Guess what's coming behind him? The next wave that's about to crash down on his head and wipe him out. Where if he had just let the first one go and turned around and be like, hey, here comes another one. Right? So the little surfer guy, he's like, ooh, look at that big wave. I missed it. All right, but if I wait, there's another one. I'm going to jump on that one. But if I try to jump on this one, about to crash down upon me, wipe you out. Okay? I don't know if that's a good visual. I don't know if that helps you out. So you have to be in sync with when and where is the right time to try to buy and the right time to try to sell, either for profit or to start a short for a counter. Okay? All right, now, this is the tricky part, okay? That's not the tricky part. That you can all understand that. The tricky part is sometimes this part right here, this part of the wave is really short and really quick, and then suddenly it goes again. Sometimes this part of the wave is sideways, and then it takes off again. Sometimes this part of the wave, sideways, and then as it turns, it just gives up. Sometimes this part of the wave is sideways, it turns, and then it resumes. And then sometimes it does exactly what you want it to do. Trading's easy. All right? So you understand, I can't tell you which one of those you're going to get, right? Sometimes it's a 1 bar pause, right? Sometimes this right here is 1 bar and then takes off. Sometimes that's 3 to 5 bars. Sometimes that's 5 to 8 bars. I can't tell you which one it's going to be, guys. I don't know. You don't know, right? This is why I said most of the time is what we're looking for. We don't know what's going to happen. So yes, you get market cycle concept. Now, when you see a trade and it goes up and you're like, yep, not chasing that, and then it starts to turn, in your mind, you can't say, well, it's going to do this and it's going to do this every time. No, it isn't. Sometimes it's going to do that. Sometimes it's not. But you have to recognize what it should be doing most of the time. And if it doesn't, that's a sign. I got to get the hell out of here. I got to let this go. I can't do this one. It's not doing what it should. So I played what should happen. It didn't. All right, I'm out. But I promise you that if you do it late, if you try buying as it's falling and you try shorting as it's rising, now you're trying to not only be on the wrong side of the market cycle, you're trying to guess when it's going to stop going in that direction. So that's why I said at this stage of your careers, give yourself the best chance by, even if it's a counter trend move, if the price, if you want to be buying, make sure the price is going up when you hit the button. If you want to be selling, right, and I'm talking about entering trades, make sure the price is going down at the moment you're hitting it, whether it's with the trend or counter trend. Do not short price as it's rising. You are going to get run over. Do not buy price as it's dropping. You will get run over. Right? When you can put on 10, 15, 20,000 share positions, we'll have a different conversation. Okay? All right. Now let's take a look at that market cycle and let's put some bars to it. All right? Let's put some bars behind it so you can kind of get an idea of what it looks like and what it might, how it might play out for you. Before I do that, hold on. There's another concept. Listen, this is a back to basics type thing, and it's mostly for me to refer in the future for people that are new and struggling. I can say, look, go watch this event I did, and this will clear up a lot of stuff for you. Because it's things that get missed when they run through a 2-day for the very first time, or they go through the manual, because the manual's taught in pieces to break it down, and then you're supposed to come into the room and start to learn over time, right? That's assimilation at that point. Immersion learning after you've got some fundamentals. But I think this will help clear up a lot of things. The concepts of what is a big bar and what is a narrow bar, right? And what's in between, what are regular bars? It is 100% a visual concept, okay? There is no definition. That's why there isn't one in your manual, right? I get where does it talk about what a big bar, what's an igniting bar? Where's that defined? And the left brain people get very upset with this. And I'm still left brain dominant, but I used to get very frustrated when I was learning concepts like this too. I'm like, well, what is that? Try to tell an engineer that it's just, you just look at it and there's no definition of a large or big bar or small. They can't. It doesn't register. Like it has to be a number, man. It has to give me an idea. Just give me a range. Give me something. Like you just got to look at it. They hate that. But that's the truth, okay? There is no dollar amount that defines a large or big or igniting bar versus a small or narrow bar. You have to have a context in which to view the bar and view the price before you can define it and say that's large or igniting in nature, exhausting in nature, compare the elephant bar with the whale bar, whatever you want to call it, is just standing out, right? It's like, hey, what the hell was that? Compared to every other bar. Or, man, that was really small compared to every other bar. It's a comparison terminology, number one, and it's a comparison view of that bar. So if I do this right now, and I say to you, well, is that a large elephant igniting bar or is that a narrow bar? The correct answer is, I don't know. That's the correct answer. I don't know what that is because it's only one. And you're going to say, dude, there's no way that's a narrow bar. I'm like, well, what if the next bars after that were so big they went off the screen and were 6 times larger than that bar I just drew? You'd be like, damn, man, that is a small bar, right? So without me giving you context, you can't answer the question whether that's a large or narrow bar or regular bar. There's no way to know that, all right? If I drew, and I can't put a dollar figure on this. I can't tell you 20 cents, 50 cents, $2. You'd be like, well, if it was $5, it would have to be large. Well, what if the next 3 bars are all $5? Then it's regular. Right? The opening bar was $1, man. That's an igniting bar. Maybe. Let me see the chart. What if yesterday's close, each bar was $2? That doesn't look very impressive at the open. What if the average true range of the stock is $12 to $15? Then $1 is not a big deal. Right? If the average true range of the stock is 80 cents and the first bar of the day is $1, yeah, that's a big bar. That's igniting as hell. Right? So it's relative to what we're looking at on the chart, right? If I draw this bar, that's invisible, so that wouldn't help you. If I draw that bar and I said, is that big or narrow? Your instinct is to say narrow or small, but the correct answer would be, I don't know. I don't know what that is. Because what if every other bar after that was the same size? Well, now that's just a regular bar. Right? So drawing or looking at charts and wanting to know, is the bar considered large or narrow versus just like, that's just a run-of-the-mill bar? Or is the bottoming tail huge or small or whatever? Guys, it's visual comparison terminology. It's reading a chart. It's a skill set that you have to develop. Nobody can define it for you. right? So I've had traders say, well, what if I just said 5 cents? Isn't that always a narrow bar? No. Go look at Coca-Cola. Go pull that chart up intraday. Every bar is 5 cents, 6 cents, 3 cents. So no, you can't define it that way. It's relative, all right? I would say this, depending on the stock, I could probably give you price ranges that most of the time would result in narrow or large bars based on the way the stock usually trades. Would it be right every time? No, but a high percentage of the time, probably. If you can find a 10-cent bar on Tesla, it's probably a narrow bar. It's not going to happen that often. When you get a $3, $4 bar on Tesla, that's a pretty good sized bar. But anything from 30 cents to $1, that could just be regular trading on the given day. Right? So yeah, in extreme cases, I probably could pigeonhole some pricing that would most of the time play out to be true. But you can't just have set rules about narrow and large and igniting, and you have to see the damn thing on the chart and you have to compare it. Context is critical. All right. So when I start drawing these things, I'm not necessarily drawing igniting or exhausting. I'm going to give you reference points. I'm going to give you things to consider from this market cycle trade, right? So before we drew the uptrend cycle, so now let's put some bars behind it, right? So we're going to draw our nice little so here's our first phase of our market cycle wave, right? So in your mind, you're seeing that, and you're like, ooh, I know what's coming next. Soon enough, I should be seeing this in a continuation, or I should be seeing a quick pause and a continuation, or I should be seeing a sideways continuation, or I'm going to get a sideways failure, right? Or I'm going to get an immediate failure. Like any of those parts, any of that could happen next. You don't know which one of those can be. But what do you know right now? When that fourth green bar closes, what do you know for a fact you should not be doing at this moment? Right? The one thing you do know at that very moment when that fourth bar closed green, you should not be starting a buy setup. You definitely should know that. Okay? At the bare minimum, you have to have a hint of the market cycle, right? You have to have a hint that at least that happened for a moment, and even if it immediately starts to turn, you can go, well, I bought there, right? I at least bought there. I didn't buy it here. All right? So what would be that? So in an ideal scenario, you recognize, okay, I'm not buying. Now what you could root for, depending on where moving averages and stuff were and how much spacing you had away, you could root and say, listen, I missed this. I wanted to go another 2 to 3 bars, right? Let's just put some hypotheticals up there. Let's say that there's a flat 200 period moving average on a 5-minute chart right there. And there's also a prior price pivot on a 15-minute chart right there, okay? And then we had what would your 8 look like here? Your 8 MA would probably be like this, and your 20 MA would most likely, assuming it's a trending move and not a bottoming reversal sign. Let's assume this was either out of a base or the second phase of a trend, right? So your 20 is probably floating down there, and you see that 200, and you missed this entry. There is zero chance you should be saying to yourself, man, it might get that 200. I should jump in the buy. Absolutely not. Not without some sign of a market cycle turn. What you could say is, okay, if this gets all the way to that 200 like this with no interruption, then in my mind, I'm thinking market cycle is going to do something like that. Now, whether it goes all the way down, a little of the ways down, or just bumps its head and goes sideways. But what's most likely not going to happen is that. Why? Because flat 200 MAs are pretty strong support and resistance, especially when price gets away from the 8 and 20 and it's the first time they've been tested in a while, they're very strong. So this scenario is not the most likely scenario. Do you understand? Okay? That's not the most likely. Could that happen? Yeah, it could. But it's not the most likely. The most likely is this is going to hit, maybe it'll poke through, and it should pull back, right? Or it's going to get close to it, and it's going to consolidate and then pull back. Or it's going to hit, consolidate, consolidate, and then maybe it's going to break. But wouldn't that be the market cycle? Okay, so this here, buy setup, that would be okay. Why? Because this was the part of the market cycle that went sideways before it broke out again, right? But would it make sense to buy it now, right here? No, it would not make sense to buy it right here, right now. But guys, I'm telling you, I see it all the time in the room. So then it goes like this, and you're like, oh shoot, man, this thing really got away. I really should have bought it. You're really mad. And then it'll do this, and traders start yelling, it's breaking out. It's breaking out of the 200. And what do they do right here? On that bar through the 200, right there, they buy it. And I'm like, are you kidding me? What are you doing? How is that you're away from the 8, away from the 20, 6 bars up so far in this bell curve of the market cycle, and I said, do not put buys on this part of the bell curve. And what do? They call breakout of the 200, and they want to buy it at that very moment. And you know what happens most of the time. Immediate failure. And then they go, well, I don't know what happened. I bought a breakout of the 200. No, you didn't. No, you didn't. That was a horrible buy. Okay? That violates so many rules. But Dr. Dan, what if it did that? Well, good for it. I'm never trading that buy at that moment. I don't care if it does that once in a while. Could that happen once in a while? Sure it could. Who cares? Who cares? Let it go. Don't worry about it. Right? You're not going to get every single move does not have a trade you can get, okay? We don't want that trade. We want what should happen most of the time. That is not what will happen most of the time, I'm telling you. So if it does, you know what you do? Root for it to go even further and play the counter. Root for it to pull back, retest the 200. Watch. You know what you do if that happens? You don't get more mad that it went that far. You say, you know what? I hope it goes a little further. Why? Because I want more space for the pullback to the 200. So I want it to go another bar. Hopefully, I get one more bar. Yeah, there we go. Now, when I see this thing turn, I got room to play a counter move. So that would make me even more happy that I didn't do this one here. I waited. It went through. Oh, wow, that thing's real. Okay, fine. That's way up there now. Now we got a chance for a counter. But, man, they chase and they chase and they chase. It's just, don't do that stuff, right? What if you got this look? Well, now let me ask you this. So that would be a horrible buy setup, right? But what if you had this happen and then this happened here? Could you take that entry right there at that moment? Now again, the MAs are catching up a little, right? Your 8's probably more like this. Your 20's up there. Could this be, and the answer is yes, Avi, yes. Why? Because the market cycle turned and started back up again. So you're trying to catch it in that part of the curve, above the pivot, above the 200. It gave you what it gave you. That's all it's giving you. I didn't say you have to take it, but is that a valid entry at that point? Yes. Versus here, you're going to say, well, it's the same price. It's the same price. It's not the same part of the bell curve. It's not the same part of momentum. It's not the same part of the market trend. So yeah, it's the same price. It's not the same entry by any stretch. Because taking it here, right, gave me at least what? Price moving up after the pullback part of the curve. So there is less chance, I'm not saying it's impossible, there's less chance of that happening and then immediately doing this, right? But if I buy it right here, there's a really good chance of it doing that. You understand? So same price, not the same part. See how I can draw this thing in every time, guys? So when you, and I think part of it too is when traders see the lesson on the wave and it's a line, it conceptually resonates. And then when they start putting candles on the chart, they forget, like in their mind, they got to see like, well, that's what that is. That's that big long line with 6 straight bars up. Why the hell am I buying it right here? What is the bare minimum at this point, if that's the look? What's the bare minimum you would need to take a buy? The bare minimum requirement would be what? Yeah, what, Vincent? Yeah, Vincent. Yeah. 1 red bar. Thank you. At a minimum. And if you were going to tell me, well, I even want less of a bare minimum, I want a give back bar. That's a little dicey right there. But yeah, to get the curve, and we'll get it, that's a little advanced give back, so I'm not going to do that right now. To get that to at least look like this before it looked like that, you got to at least give me the ribby. At least give me the 1 red bar and then go. Right? There you go, G. Give me that. Don't chase this thing way the hell up there. All right? But as it's approaching that, so way back here was the entry. You didn't take it. Then it got to here and you got really mad at yourself because, I should have taken it. I can't believe I didn't do it. Stop thinking that way. Thinking, all right, this thing is on the run. Guess what? Rule number 1, there's momentum. I see it. I'm excited about it because I see it. I really wish I had gotten it back there, but I didn't. So now what do I want? I want more momentum. I want this thing to continue so I get another opportunity. So if you're not going to do a counter trend trade, there's nothing to do but watch. That's all you can do here. There's no entry. You're watching and you're waiting for what? At least a ribby and hopefully a pullback to the MAs for the nice pattern buy setup. But at least you got to get the red bar north. Can't jump the 4th bar up, the 5th bar up. Flirting with disaster right there. Okay? So when you're waiting, and here's what happens, guys. Here's what happens. The momentum is there, and you're a little anxious, a little mad that you missed it. So right about there, you're like, all right, that's 4. Supposed to be 3 to 5. All right, I want the pullback. So maybe you're remembering this lesson. You're like, yeah, I'm going to get that pullback to the 8. And then the market doesn't give it to you right now because it's what you wanted. So the market's going to toy with you a little bit. It's like, no, not yet. I'm going to give you 1 more little bar. Wait, I'm going to give you that. And you're like, oh, man, you didn't. All right, fine. That's 5. I better get my pullback now. That's 5 bars, 3 to 5 bars. 3 to 5 bars is in the manual. Yeah, well, so is 5 to 8. And so is most of the time. There's no guarantee that's pulling back for you just because you want it to. So then what happens is you're waiting for the pullback and then it doesn't and it's starting. You're like, God dang it. And you jump the buy. You're so sick of waiting. You're so mad. It didn't pull back. And you're like, well, it's going to go all the way to the 200. I might as well buy it. What are you doing? What happened to the whole, yeah, I understand market cycle. That is a horrible buy. Even if you think it's going to the 200, without that ribby, it is a terrible buy setup. So if I'm waiting for the ribby, if I'm waiting for the pullback and I don't get it, and this happens, I don't get mad. I get more excited, like, oh man, we might actually get to short this thing right off that 200. Odds are that's going to hold and there's going to be a pullback, and the further I get from these MAs, the better chance I get at a counter. Okay? That's how my brain works when I see that stuff happen. I don't get mad at this anymore. If I don't catch it early on, then I don't get it. I miss it, and I wait, and I let it go. I'm not going to get pounded by the 50-foot wave behind me. The tsunami that's coming on wave number 2, Am I going to have that thing crash into the back of me when I'm chasing the first one? Right? So at this part, if I still have that much space, I either need that nice little 3 to 5 bar pullback, right? The nice little buy setup here. So we're going to go 1, 2, 3. There we go. That's pretty. That's what we want to see. And now I get my little trigger. Yeah, that's it. That's a nice little buy setup. And in my mind, I'm like, oh, I remember he drew that little wave. And where am I putting my buy line? Right on that part of the market cycle. Yeah, that's what I'm supposed to do. Yeah, that's right. Get it? Where if you jump the red bar, if you jump the green bar up there, on the next green bar, you decide you want to put a buy entry on right there, then you have to go back and say, well, wait a minute, I was on that part of the up move way up there in the market cycle, and I put a buy line right where he said not to put it. Okay. At least get you the ribby, because then you at least gave it that moment. And on the turn up, you can put your buy on the correct part of the curve. Even though it's short and shallow, it's on the correct portion of the curve, right? Of the wave. You're at the right part of it. You didn't do it here late. You didn't do it here as it was turning over, right? You did it when price. That's why I say, if you just remember, guys, is the price has to be at least going up, right? That would be the right time. Now it was going up here too, but you're really late in the curve. All right. Now, is there a chance, okay, is there a chance that this gave you this little rib, whoops, where's my box, that you waited, you timed it, you were patient, you got the red bar ignored, it closed, you're like, I remember the lesson, and then you bought it right there like you're supposed to, you're all excited, you're like, this is all, oh, I want that green, didn't short that, I want it green. You bought it right there. You're like, yes, I'm in business. This is awesome. Trading is easy. I figured it out. I'll be retired next year. And then out of nowhere, boom, boom. Like, what the hell? Is that possible? Absolutely possible that that could happen. Absolutely possible that could happen. But did you give yourself the best chance by waiting for that to happen? Yes, you increased your odds by waiting for that moment to buy. It still might fail on you, but at least you bought it in the right part. And when I teach you guys in the risk management course next month, when I teach you how to do this properly, guess what happens when that event occurs? You don't lose any money anyway. You're walking out at break even anyway, so it doesn't matter, right? But if you take the buy right here at the top and then immediately fails on you, you walk away with an L because it was a horrible idea to begin with. And the market's like, what are you doing? It just smacks you down like, come on, man. Get with the program. All right? So when you're, excuse me, when you're envisioning that market cycle and you start putting bars behind it, right? It doesn't matter if it's a short 1 bar. It doesn't matter if it's a 3 to 5. It doesn't matter if it's 5 to 8. But just remember, where are you on the curve and what is it that you're doing? Right? Where are you putting those dots? Okay. So if I go, I think I had one. Hold on, let me check this real. I think somewhere I had one with dots on it. All right, now this is, yeah, this is getting really, some of these, oh, here you go. Here's a good one. I don't want to show you too good of a bottom because it's going to be hard for you to pick it off like that perfect in the beginning, but this will be good enough. So let me see, it was 1, 2, 3. All right. So if we had an actual chart and this thing was going to start going down like this, right? So we're going to go down, we're going to rally a little bit, we're going to go down, and then we're going to get to here like that. Would my buy setup, would it be good to buy it right here? That would not be a good idea. Is it downtrending? If that's the price action, is it downtrending? Yes, it is. However, this is a long part of that little market cycle. So if this thing turned like that, and I put a buy right there at that moment, and I had some space here, and we'll go over spacing rules and stuff another time, but from a concept of market cycle, would that be the right place to put a buy? Sure. And what would make me think I had that? Well, I could have, at that moment, right, I could have something like this happen, right? I could have a little tail happen down there. That would do it. I could have a little red bar, green bar reversal moment like this. That could happen right there. I could have a tail that actually turned green at the same time, right? That could happen. So there's a number of things that could happen right there that would tell me, okay, that's that little moment, and that's where I'm trying to put the buy on the little market cycle, right? But I would not put it on this side. I would not do it with a big red bar on the way down. It has to at least be on the way up. Okay, there has to be some event to put that on there, all right? Okay, so now conceptually drawing a little market cycle concept, let's put it on a chart. Oh, looky right there. There's the buy setup. Now see where the blue dots are? Where are the blue dots? As price is going up, I know it's hard to see because those bars are small, right? Because it's a little 1 minute chart. See the little red bar right there? Blow this up a little bit. See that little red bar right there? You see the green bar took out the red bar right there. Where am I on my market cycle? Toward the end of that move. Even if I think it's going to do this and go lower, that's where you put the buy on the cycle, right there. Wow. It's like magic. Right? It's just doing exactly what we talked about for the last half hour. I'm just showing you how, what I'm showing you and trying to get you to understand and see is exactly what I do day in and day out, right? And then where would that trade then, where would you look to sell? Remember we drew this part, you guys are going to love this. Like this is, and those of you that were in the room, like this trade happened. This is not me adding dots to a trade. This is what we did in real time, all right? So let me go back now and take this out and we'll talk about the other side of that. Like once you take that, what should happen? Based on everything we just drew out conceptually, right? We talked about patterns and there's one missed one right there. See if I get you guys. See if I can trick you early here. All right, so now we're going to take this part of it, all right, and we're going to extend beyond it. Okay, and we're going to say from that part of our entry, if we're envisioning the way this is supposed to play out, right, it's either going to just rally, all the way back like that and just keep going. That's one possibility. It's going to rally and roll over. That's a possibility. It can trigger, go sideways and fail. That's a possibility. It could rally, give us a higher low, and then suddenly turn this way. I'm like, ooh, there's a little reversal action there, right? Did not make a new low. We actually went that way. So that could happen. Okay? I can't tell you which one for sure is going to happen. But what we can do is looking at the overall pattern at that moment is we can make a guess based on history as to what should happen most of the time and play it for that reason. That's what we can do. All right? So if we had, if it played out this way, we would exit immediately. It has not bouncing, that's not working, we got to go. Take it and move on. Or reshort, right? But do not hold that long. It's over. Okay, didn't work it out. If we rallied up enough that we were profitable, we could take some profit at that location and ride the rest if it kept going. If it turned over here and then rallied again, we could then buy into that part of the market cycle. And if this thing got really extended back up near these prior highs, we could do what? We could take profits. Right? That would be according to how we drew the market cycle concept earlier, correct? All right, so let's see what actually happened and what do we actually do. Well, there's the little 3 to 5 bar rally for a market cycle retracement level. That would be in line, right? If this was the move down, that's an acceptable 1/3 bounce up. And now from here, so we took some profit. Now what could happen from there? We could trend lower. We can consolidate and go lower. We can consolidate and go higher. We can have a 1 bar blip and immediately go higher. That's it. Or we can just die on the vine and just, that's it. It's over. So what's going to happen? I don't know. I don't know what's going to happen. I just know what I'm going to do in each of those scenarios. So when I'm going to trade, I'll just say, guys, there's only a few things from here that can happen. So we're right at 146 too, right? There's a good chance that when this thing breaks, if it holds on to the whole number, it's going higher. Why? Because that's usually what happens in that scenario, okay? I'm just telling you. That's a whole other lesson for another day, but that's what should happen. So I'm going to get that first profit out the door, and if we hold on to this, we're probably going higher. If I'm wrong and it breaks underneath and comes back to my entry, I got to get out. Because I'm in a downtrend, I'm counter, I can't hold on to that long anymore. I got to exit. And if I didn't short right there, I'm not going to short right here either because I'm late on that entry. My short should have been there. So if I'm wrong and I exit here, I have to wait for what? I have to wait for this to come back up here and then turn. I go, oh, back online with market cycle. Why wouldn't I short there? Because I'm super late. So unless there was a GBI down there, I have no business chasing that short. Ooh, look at that. Continuation. Still going up. Oh, what does that look like? What does that look like? That looks like one of those little red bar ignores that he drew where he said rally, tiny little pause, rally again. That's what that looks like. That's what that looks like. Oh, is it going to be? It is. Did I add right there? No. Should I? Probably should have. Why didn't you, Dr. Dan? Well, I was busy answering like 15 different posts at the same time. I had 2 open positions. I missed my entry. That's why. I just missed. Should I have? Absolutely. Is that a spot on entry? Yep. I missed it. So what do I not do? I don't start putting blue dots way the hell up here. Garnet. All right, Garnet. Garnet's killing me, man. He's like, I know who was asking those questions. So anyway, you don't see any blue dots right there, right? Why? Because it should have been right there and it wasn't. So if I miss that entry, nothing I can do about it. I just hope that it goes way up here toward 147, toward this pivot. Whoops, my drawing back here. Toward this pivot, right there at 140. I hope it goes all the way to there so that I can get massive fat profits on the rest of this trade. I don't get mad that I didn't get it there, and I don't start buying late because why not? Well, that would be on the wrong part of the bell curve, wouldn't it? That would be the wrong area to start putting blue dots. Oh, look at that. There's another little profit take. There's another little profit take. Why, Dr. Dan? Why are you taking profit right there? I don't understand. Like, oh yeah, wait a minute. You're at resistance and you're on this big chunk of your market cycle curve. Yeah, that's right. I forgot. That's when you said to do that. Oh, wait a minute. Why did you take the rest of the profit off right there? Oh, that's right. Because when the curve rolls like this, if I'm long, where was I supposed to see my sell setups, my sell bars? On this part and on this part. Isn't that where I drew them for you? Isn't that what I drew earlier? That's when you should see sells at that part of the curve. Yeah, well, look at that. Isn't that right exactly where you want them? Mm-hmm. That is correct. Why didn't you do anything over here, Dr. Dan? I didn't see it over here. Right? Is there an outstanding GBI on that chart? Oh my goodness, is there? Right there. Look at that bad boy. Look at that GBI. So there's your third bar down. You would not start the short unless what? GBI. So that gave you what kind of a look on a market cycle? That gave you the drop and then the little bitty pause and then drop again right there in that GBI. So you would have put a short right there if you hit that GBI. That was a good one. Just a little pointing it out. But that's why I didn't see it until it got all the way down to here. And I'm like, all right, well, here's where we are now. There's nothing else for me. I can't short now. There's nothing else to do but this trade or wait for a whole new sell setup to form. Wait for the whole next wave of market cycle to develop. Right? That's all you can do at that point. But as far as putting the dots on the chart, damn, dude. All right, now this gets a little, I don't want to make it too, that's too good of an entry. That's actually going to be, that's like literally on the turn, right? That doesn't happen all the time. All right, let me use this chart here. There's a good one. Let me set this up for you guys. Okay, 1 second here. Don't panic. So earlier when I was drawing, right, I drew you an uptrend, right? Remember I drew an igniting move uptrend and I drew the flat 200 at the top and I said, hey, if we had this move and we missed it and we put in a ribby, right? I just did that like 20 minutes ago, right? Okay. I didn't draw you the opposite at the moment, okay? So let's do the opposite on an actual chart since I didn't draw it and I like to give you both sides of the coin, all right? Let's actually draw that out. Oh, 1 second, guys. Okay. So in this moment, what would make you think about going long would be something like this. And then if you could follow it up with an immediate right there, and then that would be ideal, fantastic. Okay. If you were stalking that for a base breakout, you would have hit it right about there. Right through the base, breakout bar, try to pick it off. Okay. That would make you think about going long. All right. Now, what if instead, what if you weren't even thinking short? You were like, man, I'm thinking long on this thing. I'm not even thinking short. But all of a sudden, out of nowhere, it gives you a big red bar after that bar. You're like, what's going on here? I'm not even thinking short. I'm waiting for this base to break out. And then right there, I'm like, well, I don't know what that is about, but I'm not thinking about short yet. Right? And then that happened. And you're like, wasn't ready for that. If I was going to have done a short, it should have been right there, right under that tail bar's low. That would have been the triggered event if I was ready for it, possibly even at 58. But let's say I wasn't ready. And then that's what happened. Well, here's support, right? There's the pivot support. So should I be shorting at that bar's low? Nope. So if I didn't short there, I missed the trade. Plain and simple. So what do we need? At this point, right? Just remember, I have market cycle going. So I'm starting this. I either need to root for it to go really big, really far in one move, keep going for me, or I need a little pause and then go. I need something to get my line, my entry in sync with that momentum. Get on the right side of the market curve, right? That's what I'd be rooting for. So there's nothing to do right now. Or this, or I needed to immediately pull back, retest 58, and then put in a sell right there. So I'm like, okay, now I'm back again. I'm timing this up correctly. Even that's fine. I would not want to go all the way to the 20 because that's 100% retracement, and that's also going back above 58, and that would be like a poke through, held the pivot. I would not want that for a sell. Like that would make me not want to short it anymore. Okay, the fact that we're out of this base and under 58, I want to stay there. So I either want continuation, GBI right here, or a shallow retracement with an immediate rollover. That's what I would want. Or consolidation and then a breakdown later. I could do that too. All right? So what if, well, let's just see what happens. I just kind of walked you through most of that. Let's go ahead and do this. Oh, not at all what we wanted. Damn. Of all the things, that's kind of the one that doesn't give us the entry. This is like what I drew. Now, guys, remember, I just drew this for you, but I was going up, and I said, remember, when you rewatch the recording, if you have to go back, go back. But I said, all right, look, there's one bar. You didn't get in here. Now there's two. Now there's three. And you're like, oh, damn it, man, I should have been in. I said, don't chase, right? Remember your little market cycle. You're way up here. What do you need? Either three more like that, or you need the little hook, get at least the ribby, and then go. And where was the flat 200 on that drawing? It was like way up there. We had that space. Remember that? All right. This is the same thing in reverse. So where was support? Why is that bar so big? Why is that drawing such a fat line there? There we go. Looked like me after Thanksgiving dinner, man. Just bloated right up. There's the support. So ideally, in a perfect world, in the drawing world, in the classroom where we're learning market cycles on a Saturday, hanging out, becoming educated traders, putting in our hard work, grinding out our 10,000 hours. It's not called 10 hours, traders. It's not called 10 days. It's not called 10 weeks. It's called 10,000 hours for a reason. Coming to me after 10 weeks. Why am I not profitable? It's been 10 weeks, dude. Give me a break. All right, now, if I'm going to draw it, right? If I'm going to draw it out, and remember, I can be a little bit sarcastic in this because you're not paying to be here. This is not the chat room. This is not live chat. This is a voluntary, I am just going to run off at the mouth, and if you want to attend, you can attend. You don't like it, you can leave. Okay? So no whiny emails. From here, what's ideal from here? Well, if I was drawing market cycle, I see that, and guys, what I'm doing for you today is trying in some way to visually show you what happens in my head. Like the thoughts and the projected images that I'm putting into a chart while I'm trading is what I'm trying to do for you. Okay? This is how it plays. It's like a movie, right? Like I'm seeing the bars, I'm seeing the move, I'm anticipating, like I'm playing out and projecting a movie that's showing me all these different things. It's like when a quarterback comes up to the line of scrimmage, if you don't watch NFL, I apologize, right? But when the quarterback comes up and he reads the defense, he is playing out like 5 different things that could happen, okay? If the guy from the left side blitzes, I'm going to do this to the right. If the guy drops back, okay? If the guy from the left side blitzes, I'm going to do this to the right. If the guy drops back, I'm going to do this. If this happens, my receiver's going that way. And the ones that can process it in 2 seconds or less are the great quarterbacks. The ones that can't and the ones that are not as good, right? So they've already played it out. Peyton Manning talked about this. Tom Brady talks about this. Patrick Mahomes talked about this. If you like basketball, Michael Jordan talked about this ad nauseum. They say all great athletes, right? You listen to interviews with Messi, they all tell you it's like a movie in their head and it's going in slow motion when it's happening to them. But it's in like split seconds in real time when we watch it, right? But they've already played it out. They already know, if I do this, he does that, I'm going to go here, pop, 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 pop. And they execute a play and you're like, how did they know that was going to happen? It looks so easy. How is he so open? How did that pass get through that lane? How did he make that? How did he score that goal? They already saw it. It was already there. They didn't just do it. It was played out moves ago. Okay? So I'm trying to like explain or visually show you this is how I see it. This is what I think in real time, right? And hopefully it's, it's coming across in a way you can comprehend. It's, you don't actually want to be in my head, trust me. You don't actually want to be in there. That's not a safe space for anybody. You'd be like, what is going on up in this place, man? Get me out of here. You just want these pieces of it, okay? You just want, where's the room? You'd be up in there like, hey, man, where's that one room that has this stuff? I don't need all this other stuff I'm seeing. Like, I need that. Where's that door? Just put me in there, and then I'll leave when I'm done. So that's what I'm trying to give you right now. All right? So if we have this, yeah, so we want from here, what happens is this. The trader freaks out, and then they immediately want to short right now, which is wrong, right? That's wrong, okay? So what you want is you want this to do that and then sell set up, or you want it to just go ahead and run on down. Just, I missed it. Just let's go ahead and get it over with. And then right down here, I'm looking for that. Okay. So what are the ways we could get this to happen so we can get ourselves set up? We could get a couple of our rally, like a gift trade, right? Like a gift scenario. We could get a GBI, or we could get some consolidation. That's it, right? There's nothing else that could happen right here. That's it. Those are the 3, or we're not going to get the entry. It's just going to go without us. Guys, I'm not doing givebacks today. All right, that's a little advanced. I'm saving that for another day. So technically, yeah, give back too, but let's not get on that. So if we just kept going, then we're just not going to get any short, and we're going to play long off the 200. All right, that's how I would visually play that out in my mind. So if you see that bar, you see that form, you now have 2 thoughts. If the GBI triggers, that's my moment. If the high breaks, Instead, then I'm giving myself this part of the market cycle and I'm going to stalk the sell setup like that. Or option 3, we go sideways, AMA comes down, and then we're going to break the low and short there. That's 3 ways this can go, okay? So that's what you'd be ready to do right now. And oh my goodness, does this not look just like the drawing, but in reverse? Because if you chunk this part out right here, when you go replay this recording, this is just the inverse. Look at where the MAs are. Here's the little green. Here's the little blue. I just did it going up. This is identical to, go back and watch it. This is exactly how I drew it for you, just going with an up move, with a flat 200 and a breakout and the 8 and 20 lagging, and you got separated, but then you got your one little moment, okay? I'm telling you, you'd be like, damn, that is exactly how he drew it. Because when it works with momentum, they play out like that more often than you'd believe. When you start trying to trade this crap right here, when you're in here doing a bunch of buys and sells and you take 4 L's in a row, and I go, well, where's the momentum? What are you doing? You were bored. You were antsy. You were forcing trades that weren't there. When I see this and I'm like, all right, boys, let's short. Let's go. I have momentum. It's clear. It's obvious. It's evident. I didn't chase. I waited. GBI. Where's the target? The 200. Can I guarantee you that that's going to make it to the 200? I cannot guarantee it. Is there a pretty good chance it's going to get close? Unless there's some other price pivot that you're not seeing on this chart, and that level's 57.09, so, and that's 56, 80, 90, whatever. There's a pretty good chance we're going to get to that target, okay? Guaranteed? No. Pretty good chance? Yeah. Why? Igniting move down, caught everybody by surprise. GBI. Ooh, only 1 bar in the market cycle for the pause. What's the rule about GBIs? When you go through your manual, you'll be like, oh yeah, I remember that rule. What happens before the GBI and a strong momentum move? That much price action happened before the GBI. Usually happens after the GBI. Where would that put us? What? Right on the 200. Damn. Stuff actually makes sense sometimes. Next bar. That's just starting to look better and better, isn't it? Ooh. Ooh. Now, in context to this chart at this very moment, would you call that kind of a narrow bar? Yeah. Because now, prior to this move, okay, prior to this move, this same bar put over here at this time of day, was that a narrow bar during this phase of price action? No. It was irrelevant, insignificant, run-of-the-mill, just kind of hanging out bar. See? So the context is what determines if a bar is big, small, or regular. Because right now, it is kind of narrow. It would get my attention. It would make me jump my trail stop right there if this didn't just hit the target at 57, or if I was still trying to hold on. I would immediately lock that in right there, because now I have a measured move, narrow bar away from the 20. There's a chance of a reversal coming. I'm trying to hold out to get that, but I'm not going to let this thing rally up here and throw away my gain. Okay, so I'm locking it in on the narrow bar. And then Miss Market says, you know what, Danny? Since you paid attention, since you listened, since you did what I asked you to do, since you finished your honey-do list for me, I'm going to give you the reward. Bang, there you go. Take your full target. You did all the right things. You didn't chase. You waited. You had a target, you had momentum. But guys, do you see the difference between this right here? How do I do? No, I want no fill. No fill. This is momentum. This is crap on a cracker. That's momentum. That is not momentum. That's garbage. Nothing happened. There's nothing to do there. That's momentum. When you have momentum, dude, it's easy. Because most of the time, it will play out. All the time, Dr. Dan? No. Every time, that's good? No. Most of the time. And here's the beauty of it, guys. Once you learn the risk management side to go with this, when you play momentum and you play these entries right, where it's most of the time things should happen. When it doesn't, rarely is it an immediate all-out failure. Most of the time it starts doing what it should. Then it changes its mind. You go, oh, we're not getting Chinese tonight. You want Italian? Okay. All right, let me turn the car around and get Italian. And you just change the plan and you get out. That's the beauty of it. So even though it's not all the time, it's not the opposite. You rarely have it immediately not do what it should. So you have time to adjust and get out and unscathed and go, oh, we're not following through right there. Okay, I'm out. Break even. That's the beauty of it. Okay? Amazing, right? Like, it looks like the drawing. Life imitating art. As it happens all the time, every day. It's not like, oh, he found the one chart. No. What happens is traders try to find the one chart. You know what they want to send me? I get it, man. I do. I don't buy. Half the time I don't even respond. I'm like, oh, well, you cheat. You want to chase that, you chase that. Here's what the trader wants to say. I want to show them this because this is what happens most of the time. This is how you'll make money. This is how you'll be consistent. You know what they want to do? They want to go look for one. And, dude, they'll look for it. The ego is strong in this trader, right? They'll go find this chart right here that does that. And they'll go, see, if I shorted the 200, look what it did. That's what they want to show me. And I'm like, you know what, man? You go ahead. You chase that. You chase that dream. You go get that trade right there, and you have good luck with it. I wish you the best. I don't care if it does that. Right? It doesn't matter. And not looking for outliers. Right? Why do you think there's a minimum 90-day requirement before you can graduate? Minimum 90 days. Minimum, because in 90 days you cannot get that lucky. We don't want outliers that had a hot 2-week start and go, oh, I graduated. Yeah, I don't know, man. 2 weeks, got lucky, cut a couple of opening trades that you guessed right on. That's outlier stuff, man. We don't want that. Oliver doesn't want to fund outlier trading. He wants to fund consistent trading. He wants to see consistent results. Right? That's why we have those bare minimums. Right? And when you get look, I'm not going to go over this trade because it's a little too, I mean, it's almost, you're going to say how, I don't know how to get that good at the market cycle. But just to show you what's possible, all right, I'm not going to analyze this one to death, but I just want to show you what's possible. All right? This is what's possible when you get really good. So look at the blue dots and look at the red dots, right? So here's blue dots, there's a red dot. That red dot is an exit, not a short. Right? That's an exit. That was this long here, waiting, hoping. Look, so as this unfolded, okay, so we're waiting for market cycle there to go higher, but it didn't. Right? It went sideways. Okay, fine. I'm sitting on break even. It came down. It hit right there. Damn it. Out. Then what happened? It bounced off a higher low. So we're back in. Why? Because the market cycle did what? Turned to the upside. Right? It came down and then it turned. We put our dots on the up move. And then what did it do? Then it caught fire. We took profit And then it went ripping through a 200 and turned over. And we took profit. All right. Why was this entry here? Because price was going back up. So that's literally catching the very moment that thing, I mean, that is, like if you drew it on a bell curve, that buy entry was like right there. I mean, that's just picture perfect, right? Like it's catching it right there. But it's on the way up, not the way down, all right? Now, again, guys, I don't expect you to do that yet. I don't expect you to catch that kind of move. I'm just showing you it's possible, okay? I mean, that's literally, that was a really excellent trade that caught everything right on time. Sometimes they don't work that well. But it's possible to do it. I just want you to see it's not fluky. It's not like, oh yeah, here was that drawing, by the way, right? So can I put those two trades together? How can I put those two charts up so you don't have to rewind this thing to find it? I want that one there. And I want to put, give me a minute here, guys. I want to put it on this here. And then make this bigger. Yeah, there we go. I think this will hold. I do have to say, hold on, just give me a minute. I want to get this on the same page. It'll be worth it. And then I think I don't know if I have to save it or if it'll just do it. No, it'll save it. All right, so look, this is what I was referring to. This was the drawing I made when we did this earlier. This is an actual trade chart. It's just in reverse. Drawing, concept, actual trade. Oh my goodness. The stuff, look, the 8, the 20. Like I'm drawing this based on all my years of experience. This is what it's going to look like. That's about where the MAs are going to be. That's about the spacing. It's about how that's going to go. See? That's what you're going to be capable of, guys. Okay? That's what you're going to be capable of. Now, I want you guys to realize this. I have gone into market law 1 and market cycle, and it is now 12:30. So when you guys watch the 2-day one time and you cruise through the manual one time, you're like, yeah, no, I got it. Like, no, you don't got it. Okay? We haven't put a dent in this thing, man. We have not put a dent into this. And look how much information we've gone over already. Just on those 2 basic concepts. Right? Just on those 2 basic concepts. Now, speaking of those 2 basic concepts, the other thing I want you to get down, and I will repeat this until I just stop moderating one day. Right? That's when I'll stop saying this. I might even mumble it in my sleep. Because of this phenomenon of market cycle and this concept of separation and extended moves, there are 2 rules, guys, that you have got to get down pat. Number 1, do not, you can write it down now or you can listen to the recording later. You do not go long after multiple bar move up into resistance, whether it's a pivot, whether it's a flat 200, I don't care what it is. Do not go long multiple bar moves into resistance. This would be a multiple bar move into resistance. Do not go long right there. Don't do it. Okay? There's a pivot, a 200. This is the sucker trade of sucker trades, man. You're so late. It's so over. Unless you get that little hook move, you're going to lose. Okay? Do not go short multiple bar moves into support. the opposite of the first one, right? And it all ties back to this whole market cycle concept. If you don't catch the entry when you're supposed to catch it, you missed it. It's okay. There's going to be so many more setups for the rest of your trading life. It doesn't matter if you missed that one, right? But you missed it. Nobody's kicking you out of the program because you missed an entry. I missed it. All right, what's next? What's the next thing that can happen? Where's my next possible chance to play, right? The question I get most often from new traders is this. Why do you, and again, guys, this is a trader perception, right? Why do you always go counter trend? I don't always go counter trend. What I always do is if there is a strong momentous move that was posted in the room and I didn't get this entry where I'm supposed to, and momentum continues, then yes, I am always looking for the next available market cycle move, which is either a ribby for a long or a counter trend short. That's the only two moves I'm going to get. That's it. Because if it goes sideways, it'll be a breakout, and I'm not a huge fan of breakouts. It's not my favorite strategy. So if this triggered or gets to the 200 and then there's a poke through that does this and I go short right there and they're like, oh, you always do counter trend. Well, you know what? You posted the trade 8 bars up into the 200. What did you want me to do? Try to go long? That's the only trade I can do at that moment. And because it was really strong momentum and a really extended market cycle, and I know most of the time that's coming next, yes, I'm going to do that trade. But if you had shown me the igniting bar at 935 that came out of a base and you said, hey, Dr. Dan, igniting bar, oh, awesome, let's play that long right there. Then I'll do that trade with you. And I'll do the ribby. Then I'll do the short. But you can't show me something late and want me to jump the long with you because you're late and you want company. Like, man, that's all you. That's you. You jump right in that trade. Go right ahead. I'll be waiting up here and I'll take this one. So it's not always counter trend. It's always if you're late seeing momentum, the two options are wait for the pullback buy setup, here market cycle, or rally even further and counter it. That's it, man. There's no other option at that point, right? Unless you get the rib. If you get the ribby and you still have space, you can do that too. Okay, but then we got to get to market law 4 and talk about when you wouldn't do a ribby, and I mean, there's lots of other stuff to go. Again, this is I want to get some basic concepts down, right, for everyone, but especially for new people, so they're at least getting started on the right track before they start getting into advanced stuff, right? Or eliminating the most common mistakes that I see that can, get you off to a slower start and plague you for a while and you don't know why. Right? This is the kind of stuff that we have to make sure we understand. So if you don't, it's just not going to get it. Or you might get it eventually. So let's see how we do here. Let's have a little quiz. Pop quiz, hot shot. What do you do? 5 bars up into resistance, hot shot. What do you do? Name the movie. You guys don't know? No, name the movie. Where did that movie come? You guys are giving me the right answer to the question. I want to know what that movie is. Pop quiz, hot shot. You guys, if you don't know me, I love trivia. The correct answer, you guys are all saying the correct answer. You don't buy. You short or you wait for the pullback. Yeah, Ronald, first one with the correct answer. Speed. That was from Keanu Reeves and Dennis Hopper. Pop quiz, hot shot. You got a hostage with a bomb strapped to his chest. What do you do? Shoot the hostage. It's like, what? Shoot the hostage. Because then he has to carry dead weight. Makes it harder to get away. Great movie. If you never saw Speed, that's an old movie, right? Before Keanu Reeves was known as John Wick, That was his first really big action movie, and it was actually a very good movie. If you like action movies, it's an old one, but it's a good one. All right, so it's time for your pop quiz. Here we go. We're going to do this. I'm going to give you an easy one. I'm going to put it on a frickin' dinner platter, right? Because we're learning. So it should be a layup. Doesn't need to be tricky right now, right? You need to have a concept solidified. That's not going to work. So let me set this up. Give me just a moment. Like I said, guys, none of this is rehearsed. This is all, just like free flowing. None of this is planned. So now I have a chart that I want to use. You got to just give me a second to set it up. I'm going to try to eliminate as much of the useless information so you don't try to gain an unfair advantage reading the chart. I don't know if that's going to work. Hold on. No, let me try another one. Just be patient here, guys. This is going to work better if I do it the right way. Can we have a 5-minute break, you ask? No, I don't, because I don't want a gap in the recording. So if you want, listen, it's recorded, all right? So if you want to take a break, by all means, no, just go ahead, leave, come back. I'm not, you can watch, you can watch it over later. So I just don't want to put a hole in the recording. So that's why I'm saying no to the break. If I can go through it, you can go through it. I don't like that one. I'm trying to give you guys the, can I do this one? Yeah, here we go. This one is good. And it even has the dots on it. Oh, I don't want the dots on it though. You guys are going to see that. Shoot. All right, let's go. Let's start with something pretty simple, okay? Because this one is very simple. But I want to make sure that we have simple down here, because if we don't have basic simple, then anything after that is going to be worse. So we'll start with a nice, easy warm-up question here. And I'm going to touch on, I'm not going to delve into it too deeply, but I will briefly go over a give back bar is simply a red bar ignored or a green bar ignored that is present momentarily and then disappears and turns into either a tail or a green bar ignored. So, all right, that's what it is. Okay, so let's go. We'll start with this bad boy. All right, at this moment in time, you have zero momentum. Zero. None. No momentum, right? This is just garbage. You got a little consolidation. You got a pivot over here. Right? See the pivot high. You had momentum. Look, you had a nice little 3-4 bar run. And then it just waned out. Right? It never gave you that. All right, so you got a pivot here, pivot here. So resistance there, and then most recently, oh, nope, don't want that one. Most recently, resistance here. And a flat 200. So would you say, and then here's support. All right. So you got all kinds of, look, this is garbage. That is not momentum. This is garbage. That is not momentum. Agree? Like that's all crap. Stop trying to trade crap. You step in crap and then wonder why your shoe smells. Well, it's because you stepped in garbage, right? You stepped in crap. If your P&L looks like a pile of horse dung and you traded this all day, don't wonder why it looks like that. Stop trading garbage and your P&L won't look like garbage. So now let me give you some scenarios here. What would you do if the bar went like, boom, like damn, and closed right there? You would tell me, I hope, if I've been good, I hope I get a red bar ignored right there. Because if I did, oh my God, it's going to be such a good trade. That's what you would hope for. That's what you would, or a couple, right? You could come back like this, retest the pivot on a gift and a whole number retest and then go, right? So either way, you would be saying, hey, the market cycle was this with a 1-bar hook and it took off, or the market cycle was this with a 3-bar pullback and then it took off. And I put a buy right there on either case. That's what you would be hoping for. Okay, now, again, I don't want to go too deep into this because some of you haven't even been to the 1-bar ignored or the red bar ignored, green bar ignored. You haven't even done 1-bar stuff yet. Okay, but if this doesn't close, all right, if it looks like that, say it's a 5-minute chart, okay, which it is, and it looks like that, say 3 minutes. Now the screen's fitting just fine. That's all the chart you need to see. This screen is fine. So that's the ribby, and then you want it to, yeah, you don't need all the stuff at the bottom. So you want that to fit. That's what you're looking for. There you go. That's what you want. No problem. All right, so we are trying to get a ribby. Now, if we don't get a ribby, what if we don't get a ribby? What if it started to be a ribby and then the price starts to reverse before the bar closes? Well, just conceptually think about what happened. We opened here and we started to drop. Now the bar is still in formation, and then before it closes, so visually you saw that, you were looking at it, and you're like, man, if that closes right there, I got a ribby. But then the bar starts to reverse the red and go up the other way. Well, what's it going to leave behind? Not going to disappear like it is in our drawing, but suddenly if it opened here and went down red and came back up, is going to look like that at that very moment, right? Come on, dude. Why am I having such a problem straightening this bar out? There. It's going to look like that. Now, I wouldn't call it a bottoming tail because it's a narrow bar, right? That wasn't very big. Tails, like see all these little wicks? Don't start calling all those things tails or you're going to end up trading this garbage. Right? Those are wicks. There's a difference between a wick and a tail, right? A tail should be a significant move that was reversed. Otherwise, we have a narrow bar. So now what happens if this continues and it turns green? Oh, snap. That was red. It is now going, it's taking off without me. It's not going to be a ribby anymore. That's the hidden ribby. I call them give backs because it gives back some of the igniting bar and then takes off without you. It's the same trade, guys. Now, what if it doesn't stop there? What if it turned into that bar? You'd be like, oh, God, bless America, man, I missed it. Okay, then you missed it. You understand? If that happened and you did not enter right there because you waited for the closed bar ribby, fine. That went without you. All right, I missed it. Nothing you can do now. It's too late. Wait for the next one. Maybe you'll get a ribby here. Maybe you get a give back here. But if you don't, you root for it to get all the way to maybe 126, 3, 4, 5 bars up, and now look for your counter. Look for your pause. Look for your next move. But if you didn't get it where you should, oh well, let it go. All right, but that's what a hidden ribby or what I call a give back is. So yes, in the event that this bar took out all that resistance, you would be just dying to get an entry off, right? You'd be loving it. Like, man, just please give me the setup. Please, I was good. I cleaned the garage. I took out the garbage. Just let me watch the game in peace. Please give me the ribby. All right, so let's see what we actually get on this chart. No, we didn't. We got a little gapper here. Oh, damn. That looks pretty good, Dan. Dr. Dan, you drew that bar a minute ago. You just didn't put a gap on it or a tail on it. But isn't that the same concept as that? Because the gap has to be filled in with green. The tail has to be filled in with green. So this is the same thing we just drew. Okay, it's the same thing. So what is it that you're looking for? The ribby or the give back? You'd want it to be right about in there, ideally. Now, could it be a little lower? Yeah, it could be a little lower. Do you want it way back down here, retesting the bottom of that tail, and then turning into a give back bar or a ribby? No, because at the moment it did that, if that happened, it would look like this. You certainly don't want that visual even for a moment. That's not ideal for what we're looking for, right? If it snapped back, you'd have back-to-back tails, but it would make the risk reward really crappy. You'd have to wait for the next bar, right? Risk reward's another day. But I'm just saying, that's not, ideal is this. Give me something right in there like we just drew a minute ago. The big fat green bar with a tiny little red bar. That's ideally what we want to see. Or a hidden one, either way. Oh, wow, look at that. See it? Cut this back off real quick. See it? Didn't we just draw this? That was red and then turned green and took out the high. The hidden ribby, the give back bar, right there. What we just drew you wanted to have. You told me, man, if that happened, I would take the trade. Well, it's happening, sweetheart. Did you take the trade? Oh, it's happening, sweetheart. Right now. Boom. That's a commercial, by the way, in the United States. So if you're thinking that's being derogatory in some way, it's not. It's from a commercial where a guy's car is getting jacked up on blocks. All 4 tires are stripped. And he comes out of the store and he goes, this can't be happening. And this old guy in the corner goes, oh, it's happening, sweetheart. Your car got jacked up. before I get some angry emails from somebody saying I used sweetheart as a derogatory term. You would not believe, guys. I have to qualify some of this, which is kind of annoying. You would not believe some of the emails I get. Like it's just, it's off the chart. Like, come on, man. And again, this is free. My time volunteering. No one's paying to be here, so you don't like it, just leave and don't write me an email because I'm just not going to answer it. Anyway, here we go. So that's our trade, right? Our entry's there, our stop is there. It's the hidden ribby, it's the breakout, it's early momentum. Now, what if you didn't get that entry? Now you're hoping for a ribby here. Oh, another give back. So you had 2 chances to get in. You had 2 shots at this one. Even if you missed the first one, it went, all right, you ready? You weren't ready? You weren't paying attention? I'll give you one more. Now at this point, should you be trying to enter long now? If you're not already in, should you be trying the next bar? Nah, you missed, all right? 2 swings. If it keeps going, what should you be hoping for now? You might as well go all the way to 126 and let me get off a counter, or I need an actual red bar ignored. I can't do another. I need a ribby or I need a little pullback buy set up right here. Like I need something. If it just keeps going, I had 2 swings, I missed, get all the way to 126 and let's look for a counter. That's the best I can hope for. Or consolidate and then I could try a breakout. But no more give backs, no more jumping in on that bar. Okay? You missed twice. No. Now what happens? What does the trader want to do now? Now they're pissed. Now they missed twice and it's still going. And as it gets to 126, they want to go long. They want to go long at 126. Right there. They want to go long. Right now they want to go long. Whoops. This bar. Hold on. This bar. So what they do is they go long right there at 126, and all of a sudden it dies back and like, oh crap, and they take a L. And I'm like, what are you? That is a profit. Let me go back to this one more time, guys. Here's the market cycle. There's the turn. Where did we say the buys should be on this? Right about in this range here. Where should the sells be? Right about there or right about there. Why, oh, why would you put a buy right in that area? Why? Why would you do that? But that's what happens. And then they take a L. I'm like, I don't know. I'm telling you, man, you watch, you think back right now, okay? You think back right now to all the times you've done exactly what I'm saying. And now I want you to eliminate all the resulting lost P&L from your records. You might have graduated by now. It's very possible. You might have graduated already. But you sure as hell would not be anywhere near. Now, if you just started, you haven't dug a hole yet, pay attention. Because those that have dug holes, they have relived this nightmare too long and they might still be doing it. This simple concept, guys. We have gotten nowhere into the details of the manual. We have not gotten into money management, risk management. That's next month, right? I'm just showing you on a very basic level, if you take just these 2 concepts, the first market law that you learn and the concept of the market cycle, which has been repeating since the stock market began. It's been repeating since the rice trading in the whatever it was. I don't know. Was it 1300s, 14? I don't know when this stuff started, right? But the whole candlestick charting book, right? That's where it originated from. Way back. That's why it's called Japanese candlestick charting, right? That's where it started. So I don't know how long ago that stuff was shown or where we got it from or when we brought it over to our markets, but it's been going on forever. market cycle has been there, will always be there, will never not be there. Right? So if you take those two concepts and you get that fully straightened out in your mind, you are so far ahead of the curve and ahead of all the traders, you're off to a great start. Okay? But if you don't get this down and you want to fight this, it's going to be in for a long haul. All right? Okay. It's almost 1 o'clock already here. So I thought I was going to do 2 hours. Ended up doing 3. That's fine. No big deal. I don't have anything pending at the moment, but I also know you guys have things to do as well. And I do want to have people be able to take a break. So this, guys, look, a couple things. One, I wanted to give you some insight at the beginning. So that first part of the speech, try to get your mindset right. We touched on a little bit of trader psychology that I think is relevant. And then for some very basic concepts, I wanted to get these first 2 market laws going here. Okay. I will do a little bit more here. I just want to go over a couple more things about buy setups and triggers that I need to clarify, and then that's probably going to be it. This is not a 2-day event. This is not a scheduled 2-day teaching session or anything. So I'm not going until 5 o'clock today and again tomorrow. This was supposed to be a little 1-2 hour chart review thing. We're already at 3. I do want to go over a little bit more real quick. All right. So if you want to take a break real quick, you can, and come back. I'm not going to stop because I don't want to put a gap in the recording. But you have enough. If I stopped right here, right now, and that's all I covered, I didn't even do this next little piece. If you master these 2 concepts, what I'm telling you right now, and the rules that I've already given you to write down and follow 100% of the time, you will get rid of, just for your own self, just think right now, how many losses would you have eliminated from your trading just following this? We haven't even discussed money management yet. Just this would have taken away how many of your L's? Probably more than you want to think about. Okay. All right. So let's go to the other thing that I see get messed up a lot. Yeah, let me go to. I want to talk about setups and entries and all right, this concept right here. So we have a green bar reversal and a red bar reversal. All right. This is your basic go-to type of entry. Okay. When you have green bar reversals and red bar reversals. So it's in the manual, right? It's on this slide because everybody tells me that, oh, you're doing stuff that's not on the manual. It's right here. All right. This is the most basic, what people term buy and sell setup when they see it. It's a changing of the guard or the changing of the color, right? The green bar, red bar reversal. Notice what is not listed right here. It does not say 180, right? That is a whole nother section. There's a whole nother chapter towards the end, right? Like look right here. See the next page? See where this says green bar reversal, red bar reversal as a triggered event? So look at the difference. This was a green bar that did not break the prior high. So you need the next bar to trigger it, to confirm it. This is a red bar reversal that did not break the prior low. Right? So if I take, here again, let me do a screenshot of this so then I can manipulate it. So now, That's a green bar reversal. That's a red bar reversal. It is not a triggered event yet. Why? That green bar did not break this red bar's high. That's why. So now that there's a green bar reversal, when the next bar forms and breaks that green bar's high, that's why that trigger line is there. That's triggering the event. That is a green bar reversal. That is the trigger to confirm the green bar reversal. Okay? This is a red bar reversal, but it's not triggered. Why? It didn't break that green bar's low. So when the next bar trades under this bar's low, boom, that triggered the red bar reversal. Okay? Trigger, red bar reversal, trigger, red bar reversal, trigger. Got it? Green bar, let's do green bar again. Green bar reversal, trigger, reverse, green bar reversal, trigger, reversal, trigger, reversal, triggered event. All right? It's on your slide, guys. It's just sometimes it gets a little confusing when you see all the, because that's a lot of information telling you can play alternate stops, but the entry's the same. It's just showing you the entry is when it breaks that high. It doesn't matter if it closes up here, right? See where the word entry is? The word entry is next to this line, which means when it breaks that high. It does not mean the entry occurs when this closes. Some people are getting this messed up. They're waiting for this thing to close to say, oh, well, the green bar revert. The trigger happened right there. This is just like it's empty because it could be any shape, any height. Who knows? It could close immediately. It could go way up here to this pivot. Doesn't matter. That's the triggered event. All right? And what the alternate stop means is you try to put a stop under an entry bar's low, but sometimes it's so quick and so tight you really can't do that. So you just drop to the prior bar or the pivot. Now, if the prior bar or the pivot's too big and too far, you don't use it. Use the entry bar. Now, compare that to the next slide, which says green bar reversal and red bar reversal as the triggered event. Now your green bar reversal actually did take out the red bar's high. So that's a triggered event at the same time it's a green bar reversal. There's no need to wait for anything. You don't wait for this to close just because it's closed on this picture because the market's not moving, right? But this could have been drawn, let's clarify that. That could have been drawn the same way, right? If I did this. That doesn't change where the entry happened, right? The entry happened as soon as it broke that high. You're not waiting for this to finish. Just like the other page, you weren't waiting for it to finish. You understand? Okay. So this bar, excuse me, this bar here could be a big red bar. So let's go to the big red bar. Could be like that. Ooh. But when it triggers, that's the trigger, all right? So green bar reversal, red bar reversal, triggering at the same time it's forming the reversal bar versus green bar, red bar reversal that triggered after the reversal formed because the reversal did not trigger the prior bar. What words do you not see on this slide? Where the red, what is not written anywhere on this slide? 180. Nowhere on this slide does it say 180. Okay? This is not a 180 play. All right? Is it by textbook definition a complete reversal of the red bar? Yes, it is. So if you want to say, well, that price action was 180 degrees of the prior bar, fine. But don't call it a 180 play. It is not the same as this section down here. See this? Bear 180, bull 180. See this whole chapter? Section 8, 1 bar, chapter 19, bull 180 play. That's not the same thing, guys. This is a whole different technique, setup, pattern. It has its own section. Okay? So you have to understand that when you're looking at basic little buy and sell bars and just a standard little red-green reversal, that's not a 180. Too many traders are telling me every day they're finding 180s all over the place. And I'm like, man, dude, there's not that many 180 plays. I don't see them that often. Right? But yet everyone's like, oh, 180, 180, 180, 180. I'm like, where? And I pull up the chart and I'm like, I don't see it. Because I'm looking for this 180 play. I'm looking for that specific pattern. And I'm like, I don't see it. Where is it? And then they tell me that. Right? They point to this on a 2-minute chart. They go, 180. I'm like, nope. Green bar reversal? Yeah. Red bar reversal? Sure. Did it take out the whole bar? That's the point. The only way you can have a green bar reversal as a trigger is if it takes out the whole bar. So here's the rule. Not all green and red bar reversal triggers are 180 plays. However, all true, valid 180 plays will in fact be reversal bars. They will be. So all 180 plays are green and red bar reversal triggers. But not all green and red bar reversal triggers are 180s. Does that make sense? That's the difference. So don't get so amped up and worked up because you will think you're finding 180s every 5 minutes. That's what's going to happen. You're going to be on a 2-minute chart and you're going to think that every other bar is a 180 and you're going to overtrade like crazy. All right, it's recorded, so if you didn't get it, go back, re-listen to it. It'll make sense. And then when you go through your manual, go look at the chapters on this versus 180s. All right? Okay, so that has to be clear in your head. When is it a trigger? When is it not a trigger? All right, so if we're drawing it, I can't make a live chart right now, obviously, right? But I can kind of draw things at the moment. All right, so let's do that real quick without looking at the slide. So if we had our igniting bar, and then we had what we wanted was a ribby, all right, that would be ideal. I want a ribby. Oh, I got one. And we're waiting for the trigger. The triggered event is the second that green bar takes it out. It's not waiting for a green bar to close above. So when I say closed bar entries, guys, this is another point of confusion that I want to clarify. If I say a closed bar entry, I am not saying a closed bar trigger, okay? This is a trigger right now. That's the trigger. I am not saying closed bar entry means, okay, it's closed, now you can enter. That's not a closed bar entry. A closed bar entry is a red bar reversal that triggers itself or the next bar. All right. So in this instance of a ribby, here, let me show you the difference. Here's a rising 8, and there's a red bar ignored. Well, let's get rid of that little line. So there's a ribby. Ideally, it triggers immediately, and we're waiting for it. Okay. In the event that it did not trigger, Okay? Didn't happen. So you started getting this little pullback. And I don't know why that has a yellow outline. What did I do here? I clicked the wrong box, sorry. So you get a pullback. Yeah, that looks a little cleaner, doesn't it? So now we're starting to get gift formations, right? So now a closed bar, when I say to you in the room, I traded closed bar events forever, like 10 years or more. I did no anticipating, nothing but closed bar entries. That's not a closed bar trigger. A closed bar entry is this. That bar has closed. It is done. I see it. There's no changing it. So the second the green bar takes the high out, that's a trigger of a closed bar event. 3 bars down, inside the igniting bar, it closed, it triggered on the closed bar, I can take that entry. Not waiting for the trigger bar to close, way the hell up here and say, oh, there's my entry. No. As opposed to what, Dr. Dan? As opposed to anticipatory entries, there's an 8MA. There's a gift setup. So when I feel, hey, that's a 1/3, that's going to hit the 8, and there's a whole number, let's say there's a whole number over here on the price at. Let's say that's a whole number right there at the intersection of the 8. So now what you see me do sometimes, this is what gets traders confused between closed bar and not closed bar, is this will dip down. Get it red here. This will dip down. Okay. It will go under the whole number, touch the 8, and it reverses right like that, and I go long right now. Okay, there's a little wick underneath like that, right? And I'm already long, but this bar's still moving. This bar has not closed, and it has not taken out the prior bar's high, but I'm long. And they're like, what are you doing? You're not, that's not a closed bar entry. No, it is not. That is an anticipatory entry. Okay? If this bar, while still moving, has not closed, reverses off that whole number, and then trades over that. Oh, what is that? Why are my color bars getting all messed up here? It trades over this high all of a sudden. Whoa! Now it's a trigger even while it's still moving. But that is a closed bar entry because it took out the closed bar high. If I enter it right now and it's still moving, I have not broken a prior bar's high. I have not done anything warranted to close. I've taken an anticipatory entry based on 20-something years of experience and a strategy that I like to use. I will take some early trades, but only when it's on the way up. That would be anticipating the entry. That's not a trigger. That's not in your book. That's nothing you're taught to do until you get to the room, and it's a highly advanced trade. Okay? It's not a beginner trade. But that's the difference. Now, what if that bar closed and looked just like that? Narrow bar, no body, closed on the whole number, and it's finished. It's done trading. Well, now the second the next bar breaks one tick over that high, that's a closed bar entry for you. Right there, done. Take it. Okay? But in the beginning, you should not really be taking those until that happened and you took it over that high right there. That's when you entered. And you can say, yep, Dr. Dan, you entered right there. Yes, I did. Not all the time, but sometimes. Yes, I did. You should not do that too early in your career. I did this entry for over a decade. Just letting it trigger, waiting for the trigger, get the confirmation, go with the price, get the confirmation, touch support, get the confirmation, over and over and over and over again, so that when it started approaching support, I had a pretty good visual image of what it should look like when it does hold support. And that gave me the confidence to start taking it here versus a visual image of when, you know what, these are the kind that hit support and usually don't bounce well because all the context around it, these are the kind that generally fail. I'm not touching this one. That's how you know the difference. And even then, you're not going to be right all the time, but you'll understand, like, I've done this a few 100,000 times. I know what that's going to do most of the time. I know when it's a good idea to anticipate versus wait for the closed bar because I've seen it so many times in context that I can look at it and tell you that's not the same as that. You're going to see, hey, that's just a 3 bar to the 8. I don't get it. When I look at them and say, yeah, because you're not looking at all this other stuff going around, that is not the same as the other one. That will come for you in time. It's not going to come for you next week or next month. It's going to take time. But eventually, you can get it. Okay? So that's the difference between a closed bar entry, anticipatory entry. But closed bar entry does not mean the triggered event has to close before you take it. All right? Okay. Good deal. Good deal. All right. That was the last little checkbox I wanted to make sure that I got documented here in this little recording, because those are some of the most common issues of the most basic concepts. And when and now you guys understand that when traders tell me like, oh yeah, I went through the manual, I'm like, yeah, okay, well, I don't think you really paid attention, or you didn't really drill down enough, because momentum law number 1, market cycle number 2, and then just understanding what a basic trigger and reversal looks like. That's the, that's the area where I see the most confusion. All right. So we've done about 3.5 hours of work, and like I say, this is a scratch in the surface is what this is. And maybe next year at some point I can do another one. But for now, I needed this basic stuff documented so I can refer back to it because new traders come in all the time and they get rocked right that first week. So then they can hear my speech at the beginning of this little lecture about getting their mindset straight and what it's going to be like, and immersion learning and all that, and then follow through to these basics here. And that should get them off to a good start. I might even tell admissions they have to send this out as a mandatory watch before they come to the chat room. What do you think? Maybe I should do that. Can I do this every week? Well, no, I cannot do this every week. I have things on the weekend to do. This is what it's like in coaching with trading, right? So those of you that ask me about the coaching that I do, we're not going to this level unless it's needed, because most of the students know the basics. But this is the way I teach during the coaching. This is how I draw charts up. This is how I, walk traders through entries. And the biggest thing I can do in coaching that I can't do in the regular room, it's small enough group that I can have people tell me this is the trade I want to do, and I can look at it and walk through it with them and take it with them and manage it with them, or tell them specifically why not. In the chat room, it's too fast. There's too many. Sometimes I say, no, it's not a good trade. It's not moving. Or no, it's into the 20. And it's too fast. There's too many. Sometimes I say, no, it's not a good trade. It's not moving. Or no, it's into the 20 and I got to move on. So in the small group, you get more attention to your specific trade, because I can get to almost every one every time. Or if I miss it, I say email me and I'll do it the next time, or I do it in the email. Can't do that with 1,000 people in an open room. All right. So those of you that were asking about the coaching, you did get your email sent out today. Just a reminder, if you were on the wait list, you've been notified. But the same thing, I need you to respond yes or no, because I got to let anybody else know, like, hey, there's only X spots left. So if you have not emailed, it's not an open program. If you did not email me in the past, you can email me now and I can tell you, yes, there's spots pending, or hey, it's full, sorry, try it for next year. But if you never emailed me, you cannot just like email admissions and say, oh, sign me up for Dr. Dan's coaching. It does not work that way, right? And for the reason that I have to keep it controlled and small enough that I can give this type of attention to the people that are in the group. All right. So if you've not registered, please do it ASAP. If you have not emailed me and you want to be on the wait list, you got to email me. All right. It's not an open program. I wish it were, but then I lose all control and we're right back to just an open chat room, and it doesn't do any good. Okay. The other thing that I will extend to you guys, since you are here, today and you did do this, if you missed out on fresh starts and fast tracks for Black Friday because it was not as publicized as some of you, like, I didn't even know you had it. Some of you actually missed it, didn't even know it existed, right? If you missed fresh start or fast track and you like, man, I would have done it, I didn't know, then email me and I will make sure it gets extended to you next week, the first weekend of December. Because they might do it again at the end of the year, I don't know, but I will at least give you a chance to take advantage of it since it just happened and some of you just missed it. If you already did it, obviously you don't have to worry about it. Okay? All right, so I got those announcements out of the way, and now we'll do the Q&A here at the end as best I can. Obviously, I'm not going to get every single question. I'll be here till 5 o'clock, but the last one, the risk management, that is in January. That is not going to be open like this. That is going to be an actual paid-for seminar event with a trading day, and that is open to anybody, and you can email Jim or myself, Jim at iFund Traders, or me about that. That was the last thing I wanted to touch on. All right, but it's not this. This was just wide open, no registration needed. This will be archived and recorded for everybody forever, free, no worries. Okay, basic stuff. The other one's going to be an event. You can do it if you want. You don't have to, but you do have to email somebody about it. All right, Q&A time. Q&A. And guys, I apologize. I am not going to get to every single question. There's no way, right? But I will try to go through them as best I can. Try to find the ones that I think will apply to most people. If it's super, super specific, I might tell you, ask me this in the chat room. Okay, and we'll go from there. So I will start reading. You went some other teachers and it didn't work out. You lost a lot of money. Okay, that's normal when you first start. People tend to do that. You're studying Ovi's method. Do you prove your thinking? Yeah. Why else would you be here if you weren't going to study the method? Yeah, 100%. Stop losing money and start trading in the program. What is, you must be brand new. Fast Track is moving your account to the $100,000 level of the advancement table and then staying there live after graduation. That's what Fast Track is. If you're brand new, Fresh Start doesn't apply to you because you don't have any deficits to worry about, so it wouldn't matter. 2 and 5 minute charts. Okay. When you're combining them, when you combine the time frames, the 5 minute is easier to see extension from like an 8MA. It's easier to see market law 4s because of the amount of pivots. When you're on a 1 or a 2, it's so easy to get 3 pivots on a 1 minute chart and not reverse, right? It's very difficult to have 3 5-minute pivots form and think you're going to get 3 more. It's probably not happening, right? Most of the time. Oh, last rule. See why I like this being recorded? I meant to say this in the beginning, but it doesn't matter. I'm going to say it now. Along with the other ones I said, write this down. The other thing to remember, and I say this over and over in the chat room anyway, remember this, and it will keep you from chasing things too late too. Most things, okay, most stocks, and the market included, does not trend most of the time, guys. So if you're looking for 3 to 5 pivot moves at the start of every day, you're going to miss a lot of profits. You're going to have it and it's going to go away. And it's going to have it, it's going to go away because you're constantly trying to catch a 4-hour move or an all-day trend. Most stocks, including the market overall, do not trend most of the time. There's 1 to 2 good moves and that's it. It either goes crappy or reverses on you. This whole idea of I want to buy a 935 and ride it to 4 o'clock, you might catch that once a year if you're lucky, that you actually get one of those, right? Is there a stock somewhere that probably did that each day? Yeah, of the thousands, there's probably one. Did you see it or find it? No. And think about this. Just think about how many times you've tried to ride something longer than you should have, hoping for that 4 to 5 pivot move on your 5-minute chart, only to give up the good profit you had. Most things do not trend most of the time. So the trend is your friend? Yes. When your friend showed up to the party, he was a good friend. But every other day when he stood you up, yeah, I'll pick you up at 3, didn't show up. Oh, I'll meet you at 6, didn't show up. Oh, yeah, I'll bring the beer. No, forgot. Oh, yeah, dude, I got that money. Oh, yeah, I'll bring it on Friday. Oh, I didn't get paid today. That friend, you don't want that one most of the time. But when he's there, yeah, he's a great guy. It's a good time. It's fun. If and when he shows up. Okay? Most of the time you won't trend. So if you're reading a 5-minute chart, you more than likely will see 3 and 4 pivots from market law 4, extension from the 8MA, 3 to 5 bars up. That's when you start to pay attention. On a 1-minute chart, then you can go 15 bars in a row with like one ribby with no problem. You are not going to see that on a 5-minute chart very often, that you go 15 bars in a row with one ribby in the way. All right. So that's why I think overall that 5 will give you, you can do it on the 2, but even then you got to be careful, right? You just have to think, guys, in terms of time. So 5 bars up on my 5-minute chart is 25 minutes. So if I had a run of 5 green bars, I could potentially have 25 1-minute bars in a row. And you'd be like, oh my God, how is this happening? It's a 1 minute. There might be 3 pivots or 4 pivots that formed already. So now you're starting to go, oh, market law 4 on a 1 minute. No, I want to short the trend. And the 5-minute chart just got started. It's the first igniting move up, and you're trying to market law 4 short it, right? So you got to be careful about those micro time frames. Last rule, since you're going to go back through this recording and you're making notes to yourself, last rule to write down. You cannot be climactic out of a base. Write that down. Okay. Can it eventually get climactic? Yes. But the initial move out of a base cannot be considered climactic. Write that down. That will prevent you from fighting very powerful trends when they first start out of a base. Coaching per year. It's per year. Yes, Sanjay, the coaching is yearly. It's a yearly membership. We start in January, end of December. I don't do rolling every other month, new people coming in and out. It's too hard because then someone is always behind, right? So it's like, all right, we're taking the group and we're gonna do this. And then next year there's another group. You can stay or you can leave and the next group starts. It's not a rolling thing. So once this is full for 24, it won't be open until 25. The psychology seminar showing is full price. Yes, all the discounts for that stuff, Oswald, will be applied when it's processed. So what you're seeing is the regular full price, and then if you emailed me and I emailed you back the Black Friday price, I tag your email, and then when you register, your email processes and the discount is applied. So don't worry about it. You will definitely get that. Let's see. Scott, you got to go. Okay, no problem. It's not a question. I'll see you later. The stops and the moving of the stops, all that, that's risk management seminar. That's next month. The recording will be, I don't know if we'll have it. What I'll probably do, let me talk with my admin team when we're done. We'll probably put this in the shared documents folder in the trading room, so that when you're in the trading room, you can just grab it. And I will, because there's no registration link to reply and send off the recording to. So probably just post it in the shared docs folder in the trading room. The fast track, go to the advancement table and check the 100K BP level. It's pretty much double the 50K level. And yes, you do stay there when you graduate. Okay, you absolutely do. So if you graduate with 100K fast track, you start live there. You don't have to go back. Yes, it's recorded. Scott, that's super technical. Bring that up in the chat room. That's not for right now. What if the green bar reversal, red bar reversal trigger is a wick? Do you still enter the trade as it crosses the higher low of the previous bar? Meaning, well, that's a wick right there, right? So in this example right here that's on the screen, that's a wick. It's the high or low of the bar. So when that trades above that high, whether that's a closed shaved bar or has a wick on it, when it breaks the high right there, because that was resistance, right? The wick created the resistance. If it wasn't resistance, that bar would have kept going up instead of falling back, right? So this open traded up, was green, and then fell. That's what left the wick. If it wasn't resistance, this bar would have opened and reversed and turned green itself. So when the resistance is broken, that's the trigger. Francisco, that might be a fresh start opportunity for you. So send me an email about it. Guys, if you're going to ask any super technical chart type questions that are beyond anything we did today, that's going to have to be chat room stuff. I'm not starting to teach a 2-day now. We're not going down for another 4 hours here. I'm trying to make sure that everything covered today is being answered and addressed. Good. Am I waiting on an entry? Good question. He's talking about anticipatory entries and time and formation rules. We didn't cover that. That's another section in your manual. If it is a closed bar trigger, meaning this bar, oh, hold on. I'll go back so I can draw as I'm talking. All right. So in this instance, who asked me that question? Don. In this instance right here, that bar is done trading, right? You see it. It's closed. It's a GIF set up, 3 bars back inside the igniting bar, 1/3 retracement. Here comes the 8. When the green bar that's forming takes out this high right there, at that moment, it does not matter if that was the first 10 seconds of this bar's life, 2 minutes of this bar's life, 4 minutes and 45. It does not matter. When it triggers, it triggers. All right? And the other person that asked the question, what if there's a wick? All right, well, if there's a wick, then it has to take out that high, not just the body. It has to break the resistance to the left. So if that's a shaved bar, a wick bar, whatever it is, it's got to get over that to be the trigger. Okay? Now, the question about the time and formation is for anticipating entries. All right, so real quick, because that's a good question. So let's just do this. We rallied way up here, and now we're starting our pullback again, so I don't have to draw these bars out. And then our 8MA was about like that. And now you had a bar that opened, and let me put it right off that 8MA for you. All right. So it opened here. Whoops. It opens here like so, and it turns red to start. Right? So follow me. It's turning red. It's a 5-minute bar. And we do this. And this is 2 minutes into the 5-minute bar. Right? And then all of a sudden it goes like that. And now you have what you think is like, ooh, bottoming tail bar. Now it's only 3 minutes into the 5-minute bar. Right? And the prior bar's high is up there. So if this bar is still forming, that is not a closed bar entry until what happens? Until this completely reverses and takes out that red bar's high. Then you say, hey, bottoming tail off the 8 and triggered a red bar, a green red bar reversal there. We broke that high. If this bar is finished trading, it's obviously a bottoming tail. It's done. So the second the next bar breaks that high, bang, right there, trigger. If you're trying to jump this bar and saying, that's going to be a tail I want in before we start up, that's time and formation. That's when you would wait for it to almost be closed. Because if that's only 3 minutes old and has not taken out the red bar's high, and you say, oh, well, that's a bottoming tail, I'm going to jump in right now. And then it returns to this in minute 4 and 5. You're going to go, why the hell did I buy that? But the odds of it doing that with 15 seconds or 30 seconds, if you're pushing it a little bit, the odds of that doing that right now with 15 seconds to go, just crapping out on you is pretty slow, pretty low. If that's only 2 minutes old, there's a really good chance it could return to that. Got 3 minutes to do it. The only time I would say you run the risk of that happening in as little as 15 seconds would be if it was 9:30 in the morning. That's the first 5-minute bar. I have seen tails, green, red bars. I've seen things fail with 10 seconds left. Just the bottom just drops out because the open is just nasty, whippy, brutal price action. And there are times you think, man, I got this. I'm going to jump it because I know we're taking off at 9:35. And you pound into that tail bar at 9:40 or 9:34 and 40 seconds. And all of a sudden, boom, it breaks the low, turns into an igniting red bar. You're like, what the hell is that? That's the only time I would think you might see that. But if it's past 9:45 or so and there's no news, right, there's no sudden like spike in market action, then that's where time and formation comes from. Okay. Randall said, the hardest thing for traders is understanding where you are in a learning curve, which results in bad entries. Yes, I agree, which is why I did this whole review to try to speed up where you are in the market cycle. If you can learn the two concepts of momentum and market cycle, even if you're screwing up entries, if you're doing them in a momentum environment at the right phase of the market cycle, you got a chance to stumble into the winning trade, right? Or at least be able to preserve the loss. But if you're doing it without momentum, on the wrong side of the market cycle, you have no shot. What if the green is a wick? This green right here, this bar? Manual? You want to ask that question. If that green is a wick, how would you know it's a wick? You can't trade it after it closes. See what he's doing? This is what he wants to know. He's like, well, what happens if it's that bar? Well, you already took the entry. That's just how it closed on you. You don't get to, that's what I mean. You're not waiting for the trigger bar to close to take your entry. So if you took it and it got bigger and then fell back to entry, yes, there's going to be a wick on your entry bar. But you're not going to know that until you already took it. How do you get a positive attitude like I have? Christian, man, I'll be honest with you. I did not have this when I started. I went through a lot of work. I spent a lot of money losing in the market first. Then I spent a lot of money with a sports psychologist. And a lot of effort went into the self-mastery part of trading. So this was not my natural self in trading, right? I broke a lot of monitors, threw a lot of mice against the wall, drank a lot, and solitude, questioning the meaning of life. I mean, I went through a rough learning curve. So you don't have to do it that way, but I don't want you to think this was just like, oh, this is just how he was. And I worked hard to get to this point. And the whole opening speech, all right, if you weren't here at the open, go back and listen to it. If you were here, listen to it again. The biggest things that helped me get there was understanding the environment you're in, right? The way the market truly is and what it is that you're really trying to accomplish. Then you let go of this, or it helps me anyway, and it should help you. You realize that what you're trying to do is not you're not going to be right all the time, man. It's impossible. So patterns fail. Good patterns fail. Stop getting mad. Stop getting worked up. Stop self-doubting. Stop questioning this. It's just how it is. You know what I mean? Like, I always go back to sports. Quarterbacks throw interceptions. It's just how it is. Basketball players miss free throws. It's just how it is. They shouldn't miss free throws. They should be like 98% shooters. The basket doesn't move. It's the same distance every time. They're the best athletes in the world at their sport. No one's trying to block the shot, but somehow they miss because it's just what's going to happen, right? So yeah, I worked hard at it. It was not my nature. So my point is, if I can change the way I interacted and viewed and do this complete turnaround with ego and arrogance and I'm going to show the market who's boss and I'm going to fix every trade and I'm going to work out all my losing trade. If I can fix that, it's fixable. I guess I'm scrolling through again. If it's detailed chart stuff, it might have to wait until next week sometime. Do I actually enter and exit on a 5-minute chart? Yes, I use 5-minute charts all the time. And as I mentioned earlier, sometimes I take anticipatory entries before the bar is closed. I'm encouraging you not to do that very often. Just let the pattern show itself. Like traders want to run before they walk. Like get really good at taking the trade at the right place on the chart at the right part of the market cycle with confirmation, right? Get a confirmed entry before you worry about anticipating the entry. Now, I don't care if you want to do it on the 2 or the 5, whichever one you want to do it on. But predominantly, I'm watching the 5-minute chart. I might take a trade off the 2-minute trigger with a 5-minute chart. I might take it on a 1-minute. I might take it before it's even closed, right? But that's super advanced entry stuff. But it's still going to be the right phase of the market cycle, and it's still going to be in a momentum environment. Okay? JR, man, appreciate you. Shout out. Hope the newlyweds are doing well. All right, guys. Oh man, we're past 1:30. Okay, I think it's a good place to wrap it up here. Most of the other stuff was fairly technical stuff, and you can ask questions in the chat room as well. I can do some stuff here and there, but this is more of a beginning type thing for make sure you got basics down pat, and then also to help new traders get off to a decent start understanding the two most important things the way I see it. If you get those two things wrong, you're going to have a hard time, right? If you at least get those two concepts, like I said, you can kind of stumble around and be okay. But if you don't get those two basic things down, it's a long road. All right. All right, guys, if you have any other questions about any of the stuff I mentioned with programs or not, you can email me about it. If you have technical questions about charting or trades or whatever, save it for the chat room, because to answer you in an email, trying to answer a chart question is very difficult for me to write all that out and try to draw up an answer. I could spend like a half hour answering one email. So just save those for the chat room. If they're program questions, by all means, quick email and I can get back to you on what you need to know. All right. So hopefully you enjoyed it, and if you're new, you got to feel for how I like to teach and coach. If you've been around a while, then you kind of knew what was coming. Looking forward to our upcoming class in January. Looking forward to chat room next week and then coaching next year and getting everybody to a higher level of trader competency. So thank you for spending time with me on a Saturday. I know it's not easy to give up weekends like that. I do appreciate you being here. It's always easier with an audience than me just rambling on with a dialogue and recording that canned session. I always like to have live feedback and interaction when I do it. Okay. Okay. So moderators who can stop